All right. Hello, everybody. Welcome back to another episode of the Market Close. We are live. It is Tuesday, May 12th. It's been an interesting day for a variety of reasons, but it's been a very, very interesting day. Someone said, didn't he show us he got 2 new watches yesterday? That is hilarious. Still late, even though I got 2 new watches. We're red, but we're not as red as we were. So S&P 737.79, this was down 1% about 2 hours ago. Now it's barely down 0.5%, which is a massive, massive recovery, as you can see right there, 731 to 737 up on the day. Palantir fell to 132, now at 134.83. Corning, which I did buy more of today, or I shouldn't say buy more of. I started a position in Corning today. 195 is where I got in today on Corning. We'll talk more about that later. 195 to 199 is the recovery. It bottomed at 188. It was at 213 yesterday. So this was the name that I bought the dip on today. Corning, 198.92. AMD was at 428. That's at 445. Micron went to 706. It's now back at 759. I mean, yeah, that was the dip. I guess that was the dip. Tesla right there, 434 from 428. Amazon 265 from 261. CoreWeave bottomed at around 101 now to 107. This market moves with each other. Look at SMH. It was down 5% of the day. Now it's down 2.85%. It is quite incredible. Yeah, talk about a V-shaped recovery in terms of how this is playing out right now. Now, it could be a head fake V-shaped recovery, as in you have a massive flush out and then you V-shape only for the next day to have a flush out, because like the V ended up being fake. We've seen that happen a couple times back in February. You know, this market's a little bit of a different animal in terms of how bullish people are and in terms of the earnings growth that we're seeing. But I mean, APPL was red today. Now it's green. Like, you're seeing a lot, even Bitcoin, as bad as Bitcoin has been over the past couple of days, it's up from 79.84 to 80,743. So you're seeing a lot of momentum and excitement. Netflix was moving green when everything else was going red. Now Netflix is kind of fallen off the cliff, 89 to 87, but it was going up when the semis were going red. So liquidity went to Netflix, and then once the semis started coming back, the liquidity went out of Netflix. Shopify all the way down below 100. It's at 98.57. Now it's up to at 99.95. I mean, it's obviously been an ugly day for a variety of different stocks. You got HIMS right there at 25. That's down 14% based on their earnings. ASTS also didn't have the best earnings. That's down 11%. But it was worse. HIMS was at 24. ASTS was at 69. And although we're not ending green on the day for a lot of these names, they are much more green than where they were before. Is it a dead count? We're going to have to, or a dead cat we're going to have to see tomorrow in terms of what happens. Lumentum, 866, or sorry, not 866, 940 to 985. It's still down 6%, but you got a little bit of recovery. Apple, all-time highs. A lot of the rotation went back to Apple, and then you had Meta at 602. Very small bounce from 594. Oklo's going to have earnings after the bell. We'll see what happens with Oklo. This stock is down 5.9%. You did have JP Morgan initiate coverage on Oklo as they're getting more bullish on the nuclear sector. The 73.51, that stock still down 5.9%. Let me know in the chat if anyone bought the dip on anything. Put it in the chat. Curious to see if people indulged today. If you didn't, I don't blame you. Obviously, a little bit of a kind of weird day in terms of how things have played out. But nonetheless, if people took advantage of some of these dips, then at least today, you are being rewarded for it. You have Palantir right here. Look at that, right into the close. Look at that candle, 133 to 135.86. As you're seeing some more momentum. I see Red Cat. I see Lumentums. I see some CoreWeaves. I see a few DRAMs and Microns. Yes, Jason will be here today for Technical Tuesday. I see a few SOFIs. DRAM. Okay, DRAM seems to be the number one thing that I see people buying today. DRAM right there down 6.9%. It was at 48, now at 51. And, honestly, the way to get memory exposure without having to buy a $700 stock is to, get exposure through DRAM. So it's not crazy to see people doing that. IGV didn't even get the bump when memory was, or when software was down. So, sorry, when semis and memories and all that stuff was down. You didn't even see a rotation into software. So it was one of those days which is kind of weird. It's you couldn't easily go long one sector and go short the other sector, because everything was down. And then in the selective nature of everything being down, certain stocks went up, certain stocks were down. But now it seems like everything's recovering, not to the point where it's green, but at least to the point where it's not as red. Look at Micron, 763 up from 708. That stock down now 4%. See, a lot of people dip their toes into either a few software names or semi names. I see a bunch of Cornings. I see some ServiceNows. I see some Zetas. I see a lot of ASTSs as that stock has been getting hit. ServiceNow just below 90 as well. Intel fell all the way to 115. It's back to 120. I mean, once again, either this is a dead cat V shape and tomorrow, we're going to have a price to pay, or this is just a dip that happens in the middle of bull markets, and that has given you an opportunity. Now, you might be asking, why do we get this dip? The main reason was CPI, for those that didn't see it today, 3.8 versus 3.6. CPI was bad, but was it bad enough to the point where we need to freak out? I don't know. Now, the 10-year going up is bad. Oil going up is bad. Oil has increased by 2% since I last saw you guys in the market open. Oil right there at 102.40. It was at 101 in the morning. So, yes, it's not great to see this stuff happening, but I don't think the market is as concerned as they have historically been. And, maybe they will be more concerned, but definitely felt like the algos were selling it off, and you're seeing the algos step back in. Trump was live before going to China. Here's a couple things that he said about an hour ago.
What is your message to President Xi as it relates to the Iran war?
Well, I think number one, we're going to have a long talk about it. I think he's been relatively good, to be honest with you. You look at the blockade, no problems. They get a lot of their oil from that area. We've had no problem, and he's been a friend of mine. He's been somebody that we get along with, and I think you're going to see that good things are going to happen. This is going to be a very exciting trip. A lot of good things are going to happen.
And then this is what Trump said about today's inflation report.
Things are working incredibly. If you go back to just before the war, for the last 3 months, inflation was at 1.7%. Now, we had a choice. Let these lunatics have a nuclear weapon. If you want to do that, then you're a stupid person, and you happen to be. I mean, I know you very well. Anybody that wants them to have a nuclear weapon is a stupid person. So we said we're going to take the greatest stock market in history, and we're going to go down a little bit. And actually, that turned out to be incorrect, because our stock market is now at the highest point in history, which frankly surprised a lot of people. It's a very simple message. Iran cannot have a nuclear weapon, and they won't have a nuclear weapon. And that's 100%. Their Navy is gone. Their Air Force is gone. Their anti-aircraft is gone. Their radar is gone. Their leaders are gone. They're all gone. Iran will not have a nuclear weapon.
So Trump basically brushed off the concerns around inflation by once again making the argument that the Iranian nuclear weapon would be the worst thing that could possibly happen. And as a result, that matters a lot more, which is kind of the stuff that he's been saying for a while. The market's also brushing off the inflation concerns as you're seeing some of this price action start to go. Look at the S&P, dude. Are we going to go green? Look at this. We might end up going green in the next 6 minutes. We are $1 away, 80 cents away. But it's pretty incredible. It's pretty incredible to see kind of that recovery and how the market, once again, kind of doesn't care. Now, look, SOXL, Bull 3X leverage semiconductor ETF, that was down at 150 at one point during the day. It's back at 172, still down 9%. SMH still down by 2.6, but it just wasn't as bad as it was during the day. And it was kind of, I think, at around 2 o'clock where everything flipped and everything decided to just start going green. And again, we're going to need some confirmation tomorrow to see if that can continue. We'll have Jason on today and get his perspective when it comes to the technical elements of it. But I mean, this is a buy the dip generation. And at the end of the day, if this was a dip, which I think it's hard to say, 10, 8% down on a lot of these names is not a dip that's at least worth looking at, then you're going to have people that come in and buy. And I think that's what ended up happening today. So again, the two buys I had today, GLW and Akamai. These are two names that Jason and I have been talking about over the past couple of weeks. I think he'll talk more about it today. But Corning is, I've been calling a couple people in the tech industry. I was on the phone with a friend yesterday to get his perspective on it as well. And I will have full due diligence out on this one soon. But this one's TAM just seems to be a lot more exciting than the other photonics plays to me. It also hasn't run as much as Lumentum and Coherent, and NVIDIA invested in it. So there's a lot of green flags on this one. And then Akamai, the CDN space, they likely have a contract with Anthropic. That one also, if we're going to have more agents, likely is going to need a lot more growth as well. So those are the two that I picked up today. Zeta right there, 16.15. Did not pick up any software names. I was thinking of Shopify below 100. I didn't pull the trigger. I mean, whether it stays below 100 or at 100, Shopify is kind of one of those names I want to buy and never look at, just have it in the portfolio. I've never actually owned it. And so it is one that I'm thinking about a bit more, 99.75. It's one of the names on the software sell-off that I think has been hit the hardest. And so that one is definitely on the watch list, but I did not pull the trigger on that today. Kept myself out of the software names, at least for today, in terms of buying, and tried to get a bit more exposure into the AI build out. Microsoft right there, 407.54. Microsoft and Meta didn't have that aggressive of a dip today. Meta actually a little bit green. They introduced a new voice model today. So you have that come out with Meta. Street didn't care too much about it. Navitas, which was down about 20%, now only down 14%. They had a little bit more dilution on the day. ASTS, again, that one was still down. Do you think Micron's CEO and Gerstner could pump it? Yeah, I do. Either it's going to be a sell the news, or it's going to be hundreds of thousands of people seeing someone super influential talk to the Micron CEO claiming that it is not a cyclical business, and the biggest concern kind of goes away for a lot of people and they end up pulling the trigger. I really do think that Brad Gerstner podcast could be beneficial for it. It's just the magnitude of the sell-off you had intraday and then the velocity of the recovery is speaking to the aggression in this market. It's also obviously speaking to the algos in this market. I don't think exactly at 1:47 p.m. everyone woke up and said, no, we like Micron again. Like, obviously there was an algorithmic shift and that got a lot of people to be more excited to buy. If there's an algorithmic shift to the downside tomorrow and it disproves this move that we've had since 2 p.m. today, then we got to see how many weak hands are there and how many diamond hands are there to come in and step to buy the dip. IREN, is that green? That is also green by about 2.7%. And NBIS, that is still red. It was worse at 172. And then CoreWeave back at 107. That got to 101 during the day as well. Fun Extreme, thanks for the super chat. Loaded more Oracle at 182. I don't hate that either. Oracle's actually play between software and data centers. So they have a good software business that gives them cash flows, and they have a data center business that's levered up with debt, but obviously has a lot of growth given their cloud computing contracts. SanDisk was down 11% today. Now it's only down 6%. It's one of those things, bro. It's the Qs, they lost 700 on the market open, fell all the way to 696, now back at 707. So let's do this poll right here as we end out the show today. And very simple question here. Is the midday recovery, as the 10-year is 4.5? Yes, I know it's not healthy to see that. A dead cat bounce. AKA, do you think tomorrow the bounce we're seeing from the lows of today end up getting taken out? I mean, AMD, bro, 428 to 448. Like, if you got short around this 426, 430 range, you got crushed. If you got short any semiconductor name around that 2 p.m. time, you just got smacked. And so it was a pretty aggressive, violent reversal. The question now is just going to be, can it hold through to tomorrow? And really, if this was all based on CPI and the market a couple hours ago decided CPI doesn't matter for the AI industrial revolution that we're experiencing, then a lot of these dips will continue to be bought. 4 p.m. Tuesday, May 12th. Thank you, everybody, for being here. The stock market is now closed. We are closed for the day. I see Mr. Maddie in the chat. I can finally afford to buy lunch. We all owe a big thank you to Mr. Maddie for this gem of a company right here. Matt, I think you can afford 2 steaks for lunch if you choose to get some lunch. Matt, are you still in the UK or are you back in the States? Matt left across the pond, I think, over the past week. And it must have been crazy for you, Matt, being in the UK and seeing RKLB go up like that. Like, that must have been absolutely wild. But 117.56. RKLB ended green on the day. Even RKLB, it fell 5%, recovered intraday. Incredible. Absolutely incredible. He can buy the whole chat lunch. Yes, exactly. He can buy the whole chat lunch. AMD, 448, down 2%. That's nothing. 2%. It's just like, it's not even worth getting worried about. Oracle down 3%. CoreWeave down 6%. The NeoClouds got hit a little bit worse. Nebius down about 3.7%. Navitas, this one got hit on dilution, down 14%. Microsoft, 407, got hit with the software name. Shopify closed below 100 for the first time since February. There you go. Shopify 99.84. Palantir, what a recovery into the close, dude. 136 from 133. Nice to see that getting a little bit more excitement as we get towards the close, even if IGV wasn't catching up. The Qs from 700 to 707. Micron, we closed at 760, 765 on Micron, down 4%. Again, not even that ugly to see. Mercado Libre, that was up 1.2% of the day. You had PayPal that ended up going green. Qualcomm fell below 200, then gapped up above 210, as we're seeing on the close today, down about 11%. So whatever semiconductor name it was, it went down with the market, it went up with the market. You had Kopin that was up 20%, then fell 5%, ended up 7%. So just across the board, a lot of these names whipsawed up and down. And I think over the coming days, we'll see if those whipsaws actually last in regards to if we do get more downside or if that reversal is more real than not. Oklo, let's see what the earnings look like or what we get from Oklo. 73.94. I don't see the results right here yet. Let's see. Let me pull it up. I don't see it. Let me know if anyone's long Oklo here. I don't think it tends not to pump or dump on their earnings. Oklo's a little bit more basic Oklo. The street's expecting 0 in revenue, and they're expecting 0 in revenue and negative 18 cents of EPS. Negative 18 cents of EPS. We got to see Bitcoin right there, 80,811. Few people here have some shares in Oklo. A couple people here bought some more IREN. Don't see it yet. Should be out in a second. Let's see if the market actually cares and where it goes. Oklo up 1% here after hours. Is CSU reporting today as well? I don't see that. The only major earnings today are Oklo, DNN, and NXT, Next Tracker. But Oklo is the main one that everyone's looking at. By the way, Sam Altman took the trial today at his court case, and so we should be getting some more updates in terms of how the market is, or at least what happened in the trial, and then ultimately how the market thinks of that when it comes to OpenAI. But he was giving his testimony today. Today was the first day for him to share his side of the story in terms of what's playing out. Still waiting for Oklo. Don't see it yet. A couple other clips of Trump that we had before we get into Oklo. Here's what he said about Iran today.
Do you think he needs to intervene at all with the Iranians?
I don't
do you
think
he can help in any way?
No, I don't think we need any help with Iran. We'll win it one way or the other. We'll win it peacefully or otherwise. Their Navy's gone. Their Air Force is gone. Every single element of their war machine is gone. They've killed a lot of people. They've killed 42,000 people at least over the last month and a half. We win. I mean, no matter how you cut it.
Mr. President. What is going to be your red line to end the ceasefire for you? What will it take to pull the plug?
Well, we're going to see, and we'll be thinking about it on the flight, and we'll be thinking about it for the next little while. But we've beaten their militaries very soundly. That's over with. The blockade is very effective. It's been 100% effective. And one way or the other, it's going to work out very well. It's going to work out very well. I think you're going to have so much oil. You're going to have a gusher of oil like you've never had before. So when oil goes up a little bit, I thought it would go up much more. If you go back 3-4 months ago, when we were contemplating, we assumed oil would go much higher. Yesterday it was at $99. And if you think about it, I would have taken that all day long because it's very simple. Iran cannot have a nuclear weapon. They will not have a nuclear weapon. They know that. They've agreed to that. And then that's not what they said to me when it came to pay. We don't play games. They're not going to have a nuclear weapon.
Again, this is what Trump said before he got onto flight to go to China. I still don't see the Oklo numbers yet. They should be. Okay, stocks reacting down 3. Let's see if we can find these numbers. Oklo They lost $33 million, 18 cents negative. That's what the street expected. 0 in revenue. That's what the street expected. Okay. There you go. 0 in revenue. Lost 18 cents. They did an ATM offering of 1.2 billion by diluting. They have 2.5 billion in cash. I mean, that's pretty much it. Nothing too crazy happening on the stock right there. Oklo down about 2%. Again, this is more of a story stock and rooted in them getting more deals to get the street a bit more excited. But SMR is the only company that made revenue out of Oklo, nanonuclear, and SMR in the nuclear space. But that's the reaction you're having on Oklo. Market cap on this thing is $12.8 billion. Yeah, that's literally what the press release is. Literally everything I just said. 0 in revenue and losing 18 cents a share. Okay, there you go. That is Oklo. That is Oklo. What happened to Nubank today? What did happen to Nubank? It was down 1.7%. Not sure. I don't think we had earnings or anything. It's up a little bit after hours, but it is flat. Yes, Saudi Arabia launched covert attacks on Iran from Reuters. That was another headline we talked about in the day, along with UAE. Obviously not great to see that happening, but I don't know when the market's going to care about this stuff. I mean, by the way, Qualcomm had its worst day since March of 2020, which is kind of crazy because it also had its best day after, multiple years over the past month. But I mean, look at this chart, 247 down to 210, and this is, or 202, and this is where the bleeding stopped. And now you're at 210. Oklo again, negative 18 cents expected. Negative 18 cents is what they got for adjusted EPS, and the net loss was 33 million. The Iranian attacks from the UAE and Saudi Arabia, it's spiking up oil. You had Trump say what he just said right now, but the market, once again, does not seem to care that much. Next tracker, that stock's up 9%. They also had earnings. Adjusted EPS 105 versus 93 cents. That's a beat. Revenue 881 versus 829. That's a beat. Adjusted EBITDA 202 million. Gross margins 34%. Backlog of 5.25 billion. That stock up 9.2%. $18 billion company. NXT a beat on the top and the bottom. Red Cat just diluted by 200 million. That stock is down 5%. Red Cat and Navitas now, the latest two dilute. Red Cat was at this level earlier during the day, then it recovered with the rest of the market, and now it's back down based on the dilution. But that stock down right here. Qualcomm up a little bit after hours. Then you have Micron's down a little bit. Palantir down about 1% after hours. Rocket Lab down 1%. Tomorrow's going to be interesting, man. Tomorrow's going to be, because if this dip ends up being the dip, not literally the dip, but a dip that is good enough to buy, aka you see stocks get back to either their all-time highs or levels that are close to their all-time highs. The next time we get a dip, people are going to be aggressively buying because they will have been conditioned to feel that you buy those dips. And so let's say SanDisk gets back up to 1,650 tomorrow. I mean, if that were to happen after falling to 1,367, you're just going to have a lot more people to be excited to buy at the end of the day. Nebius is pre-market tomorrow. I'm probably not doing Nebius. I'm sure Tanner will be doing that one tomorrow, early in the morning. We will obviously talk about it, but I'm pretty sure Tanner will be streaming that one. Oklo is still down negative 1.5%. All right, folks, that's what we got for earnings. It has been a week. It is time to figure out what's happening with the technicalities of this market. Some of you guys that were in Chicago got to meet the genius himself when it comes to TA. And now we all get to hear a little bit more about his thoughts because he's nice enough to do this for us every single Tuesday. Ladies and gentlemen, it is once again Technical Tuesday, which means we got to roll the intro. What's up?
What's up, buddy?
What's
We're
up?
live. We are live.
How you doing?
I almost got liquidated today. Joking. I kid. But man, it was a little sketchy there for a little bit.
It was a little sketchy this whole day. It was a little sketchy for sure.
It was a little sketchy. I'm very thankful. I rolled a lot of a lot of you guys do cover calls and things like that. I am mostly a net options buyer, by the way. And if you don't know, option buyers roll all the time. And I rolled pretty much everything yesterday, which means I'm putting money in my pocket. It's it's very similar concept. But yeah, I was like, wow. That's kind of wild. Not wild, but figures. But by midday after the 10-year, I think this has to do with, well, there's a lot of stuff going on, but 10-year moves the market. And after that auction, we're like in the clear, and sure enough, reversal city, man.
Okay, so before we get into this, how's Chicago and how's your experience there?
Dude, Chicago is way busier than I thought it was going to be. That city is busier than San Francisco, like, I don't know, tenfold.
Yeah.
It's like crazy. Like, that's my only really relevant whatever. But I could not imagine being in Chicago in the snow, walking those streets downtown and those stairs. I almost broke my ankle once on these stairs because, the fat guy fumbling around. But dude, it's pretty cool city, man.
The Starbucks was pretty cool. Jason and I went to the big Starbucks.
The biggest Starbucks ever, 4-story Starbucks.
Yeah, that was pretty awesome.
I mean, you don't have a lot of time to go around, so that's I guess the extent of the sightseeing. But yeah.
Shout out to Chels, George. I got to finally meet George in person there.
George, okay.
It was awesome.
So George, you gotta DM me, man, because George comes up to me and he goes, dude, I took your master class like a year or two ago, and he goes, I just quit my job to trade full time, and I'm like, bro, that is what it's about, man. That is what it's about right there. And I'm like, hell yeah, RF Andy, absolutely right there, hell yeah. Like, dude, meeting you guys in person, first of all, I talked about a lot of things there, but it is very much about the community, and we wouldn't be here without you guys. So it is it's just so cool to see everybody there. I mean, there were so many people I met for the first time, and I talked to some of these people every single day. I'm like, dude,
yeah, a bunch of them were in your Discord, and
yeah, a lot of people from the community for sure. I mean, just yeah. And you've never met them before, don't even know what these guys look like, but it's instantly boom, this is my crew, right? And geez, Jason talked to us at our table, got me fired up. Yeah, man, it's a special time to be in the market for sure. There's no question about that.
All right, so let's get into it. Let's start off with SPY. This is going to be a long session today. We got a lot of stocks to look at, a lot of tickers. I'm very curious about your reaction to why we went down today from a technical perspective, why we recovered, if you think this recovery is fake, real, dead cat V-shape, a legit V-shape, what you're thinking of buying on these dips. So I think let's start off with SPY, and then we'll go.
We call it SPOOs, by the way. Since you're entering the world of trading, we do refer to SPY as the SPOOs. Somebody can tell us how you spell it. I think it's SPOOZ or SPOOs.
Why?
SPOOs.
Why do you call it SPOOs?
It's like if you pronunciate, I don't know, that we call it SPOOs. I don't know. That's what we call it. But yeah. So from a daily time frame, this green box, by the way, I don't remember when we outlined it, but this was, you asked me if we topped out at 730 or whatever. It's like, no, we could go into this area, and if we can get through 742, it's higher. Right, 766 would be next, and then here's your 800 by call it end of summer, something like that. And so from here we just need to track it, right? And we've been having the biggest green days ever out of the gate in our group. I looked at the market and I was like, okay, very quickly scan the market. I see software up in the pre-market, and I see a lot of the big movers down. And first of all, when you see something like that, like the group that was really like beaten up, starting to go, what you don't want to see is you don't want to see everything down. And that's not what I saw. So it wasn't like, I wasn't super worried about it. But we also talk about this thing called NFP all the time. And I reference this like every chance I get, essentially, but this is like my special system, pretty unique to me. I'll teach this, by the way, if anybody's going to be in New York in the beginning of August, I will be in New York, and we have a bunch of us are going to be doing a training. But this is Friday's, Friday's NFP low and Friday's NFP high, which is essentially you take it from when the market got the data, non-farm payroll data, to the close of the New York session, and that literally marks a range. And what we're looking for is we're looking for a full day session to trade outside of that range. And what I mean by that is I need to see an open and a close over, or I need to see an open and a close below. And right now, once I have that, a couple of them in a row, then I have a trend. Right now, I do not have a trend. So my first thought today out of the gate was like, look, we have open above the low, which is this 735 essentially. And even if we closed below it down here, it wasn't going to matter, because to me that means that's not good enough to trigger a trade, if you will. What I need is a full day's trading session, like fully below, and not to get too bulled up. I also need to get a full day's trading session fully above to say we're going to that 800 level, which I also do not have. Oddly enough, so tomorrow's session is a big deal. If we don't continue out of the gate right away, I'll just put this out there. I would expect, and typically what we see is we see a lot of chop in between this level until it finally does actually break, which sometimes can take like a full week. So I would expect something like that. But once we get those like 2 to 3 closes above what the number is, 738. Let me make it huge setting. 738 spot 10 right here. Once we get a full day's open and close above, say something like this, kind of where this is, but even this one, because we had a open below, that tells me that even if we have a close above, it in its entirety, it's not good enough to go, right? It's not good enough to actually say we're going to follow through. I would have needed to see today's candle hold above, which unfortunately it didn't. But at the same time, it didn't, because we closed. Anyways, long story short, we're chopping.
From a technical perspective, would you explain the downside move today as just chop, or was there something else?
Very much so. I would explain the downside move today as some knee-jerk profit taking, and at the same time, what I saw was that profit being spread out amongst a lot of losers, and which is broadening and generally healthy. So I do like that.
Okay. Cool.
And it was really like a waiting game today of like, well, how long before they buy this dip, right? And how long does software actually hold? And it wasn't. I mean, it was. I think it was longer than we probably expected, to be fair, but it wasn't that long overall.
Well, some names fell 10 to 12%.
Well, my Qualcomm fell 20-something%.
Well, Qualcomm was down 20%, right?
Yeah, but and I bought the dip. FYI. But again, I can do this also, by the way, on clearly on equity, but it's the same thing. So I really want to see Qualcomm hold this 208 level tomorrow. And again, I don't expect it to explode right away, but even though it's 20% down, we're talking about levels that we haven't seen since Friday.
Right.
Right. And you're like, oh, okay. So that said, it doesn't have to stop going down here either. Like I'm very aware that this is a little bit extended, but from a market re-rating perspective, I still very much like it. QQQ. So you know what I'll do really quick is I'll just show you the view that I look at every morning is essentially like these top 1, 2, 3, 4 boxes. And if you're looking at this on my screen, you can kind of see these same white lines are the same relevant data points across all of them. And with the exception of IWM, which honestly is like the redheaded stepchild of all the indices, everything looks exactly the same, with diamonds meaning like industrials and things in Dow Jones Industrial Index, really like picking up the speed first, and Q's having a little bit of a catch-up trade, and IWM being the biggest laggard at the moment. So still, where we saw a lot of the strength was in IWM most recently, and then in Q's as well, so maybe some big cap Q's. So these two still kind of lagging, I think is still, we're still at risk for some further profit taking in some of the names, that some of the high flyers, if you will. But at the same time, it's like the dips are getting bought, dude. And the AI spend just, you know, really doesn't care about oil prices or whatever's going on.
That's what I think. I think, I mean, CPI was the worst it's been in 2.5 years. The market cared for 2 hours. I mean,
yeah.
So riddle me this.
Riddle me this.
Do the technicals kind of prove that thesis true to you, that bad CPI, market reacts, then market recovers? Or what would it take for this V-shape to be a dead cat bounce and the market actually really does care about CPI? They're just faking this out right now with this pump intraday. Like, would you have to see a break tomorrow at a certain level? Like we lose?
It's not going to tell me tomorrow. It's basically going to be a lot of fake outs this week in both directions. Probably that's actually what I'm kind of prepared for. And probably not till at least the end of this week. By next Tuesday, we'll have a clear direction. And sometime between now and then, I basically just gave you guys the levels. Like it's if you want to be a little bit safer, if you will, and not have to jump around so quickly, I'd say, like, if you're over, like I was saying earlier, if you're over 742 and a half, we're going to 800.
Right.
Like that's just so you guys know. But if we're below 730s or 732, it actually is I'll just say this, it's a very big drop. And part of me is like, because the drop, if we lose that 730 area, it is a massive drop. Like, I can't contemplate that really it's to 660 and filling in like this massive fair value gap. So, I mean, I guess if you're worried about it, you could start to hedge a little bit. What I wouldn't do here, because the setup, I wouldn't actually sell calls here, because it is very possible that we do go to 800. I would, and because volatility is actually pretty cheap, I would defer to being long puts as a cheap hedge, and hoping that they go to zero. That's quite frankly exactly how I would play it, just because I don't want to really cap the upside. And in this scenario, because we have run quite a bit, I wouldn't be. Look, if you haven't made money here, I mean, well, I don't know what to tell you if you haven't, but you know, you could have been late to this party. I was late to this party, but yeah, it would be a choppy, probably downside, but
that's also the cool thing about the markets. You could be late to the party, and then a day like this happens where instead of having to buy Corning at 213 yesterday, I got it to buy it at 195 today.
Dude, Corning's gonna be a big one, dude. That's all.
Let's start with that one, and then we'll get deeper to the other ones.
Okay, so I bought a couple. I've been buying a couple stocks, right? So Corning is one, Qualcomm is another, which you guys know. Qualcomm's been for a while. But today it was like I bought Corning, I bought Qualcomm, I bought Akamai. I bought a couple other things, but those are the main things that I'm focusing on right now, mostly because of the re-rating story, right? And so Corning, I talked to Amit the other day, and he was like, "Yeah, dude, it's." Or I listened to him on stream, and he'll go like, the thing is, it's run so far already. And as a technician, I would just like quickly look at that and be like, no, it hasn't. But for someone that doesn't do charts that often, it's not obvious like what I'm saying. You would probably think that I was a crazy man. right? Saying, no, it hasn't moved that much. But what I mean by that is that this, let me see if I can do this, is, label. There you go. Boom. So this is 69 days, Corning, essentially right here, that it has moved basically nowhere. And so for 69 days, it topped out February 26th at 163. It pulled down a little bit, came back up, and just the other day, I think, what is this?
This
At
is
the end of May.
NVIDIA invested. Yeah.
Yeah. So they had earnings here, which I thought was funny, right? Because the earnings, we know that they got the Corning's rebranding themselves as a company, right? People, legacy is like, oh, the glass maker, they make solar panels. They make a ton of stuff, by the way, not just fiber optic cables.
Yeah.
And they do a ton of stuff also, services, etc. But it's what is the market and the whole story right now. It doesn't matter how much your company that you're following beats their expectations. Like, we all get frustrated. Palantir, greatest quarter ever. Arista, greatest quarter ever. Robinhood, greatest quarter ever. Stocks go down, right? The only thing that the market cares about is just very simply how much more did your addressable market increase by today, right? And I think, shoot, I was going to bring up a slide, but I don't want to take too much time. Corning on their earnings. So this whole run previously, like from here to here, which by the way is choppy, and Corning has a tendency to go sideways for a while. This is 90 days sideways here. This one here is this was about 60 days sideways here. And we've just clocked about the same. So to me, I'll just tell you as a technician, it's ripe and ready to roll. Over here, we got the $6 billion Meta deal, which is kind of industry paradigm shifting for the industry, if you will. And 6 billion is a lot. The stock does what it does, but on earnings, but the research that we have to do now, and this is what I was talking about in Chicago, is very different than, it's not different, but you have to be very specific about what you're looking at. And it's in the transcripts. It's not on a cash flow statement. It's not on a balance sheet. And what they said on the call is the most important thing. And that is that they locked, meaning they locked in 2 new deals in equal size and scope to Meta. That's exactly what they said. They said nothing more. If you don't know what that means, well,
wait, we gotta slow down on that. That's massive. In the transcript, Jason is saying Corning said they have 2 deals as big as the $6 billion deals they signed with Meta.
Right.
The market really doesn't know about it because a lot of people don't listen to the transcripts. But the day they announce those deals,
Bingo. And I'm telling you right there, the market doesn't really know about it because they don't really talk about it, like in the numbers. It's not going to show up on the balance sheet. It's only if you listen to the transcripts or you pull the transcripts that you find these things. It's not just Corning. There's a ton of them. But so you have to put the math together. So we were at 6 billion. Now we added another 12 billion. And then Thursday, I think was this day, Wednesday or Thursday, they announced a deal with NVIDIA for something called Scale Up. And again, very, very like, what's the word? Like cryptic, right? If you don't know what these things mean, it's pretty cryptic, but Scale Up means up in a rack. So from the server GPU in a rack to the top of the rack is a switch. What is NVIDIA's offering up is called NVLink. And that means that Corning just did a deal to basically be in every Blackwell that's sold as a system. And you can stop buying that, guys. I see the little candle moving. So you can put numbers together to that as well. That's about 3.5 billion, something like that, in addition to the 12 that we just added on the call transcript. And when you think about what's going on with Corning, I can even compare this to Amphenol. Amphenol is the connections at the end of the cable. Corning is the actual cable. But it's a company that just didn't have this type of addressable market. Like their piece of the pie, the market did not believe was this big. And so the story, they have to keep this pace up, by the way, to keep this momentum. But yeah, as long as they are and they keep getting traction, this is a re-rating. So it's not about something being expensive or not right now. And things can get more expensive. Corning's not cheap here. But if you look at it based on current financials, it really probably looks very expensive here, quite frankly. But then you put in this extra $15 billion that just got, that's a signed deal. That's the same as your RPOs or same as your backlog, right? Like I have this PO and it's coming, period.
Let me ask you this question, and I think that's such a good point that obviously the stock does not look cheap, like a lot of stocks don't look cheap right now, but you have to believe in the re-rate. I mean, Amcor at 25 didn't look quote unquote cheap, but you have to believe that that re-rating would happen, and it did, and then the stock re-rated. The Corning is up 120% year to date. Are you of the opinion that pretty much any stock that is in this semiconductor AI build out re-rating thesis, like Rackspace that you talked about a while ago?
Did you see that Rackspace? Oh my God, you see it today?
It was up again today. Do you think people just have to close their eyes and say, I can't look at the year-to-date chart because if I do, it's going to make me psychologically be afraid of buying?
Well, in the case of a Rackspace, why don't you pull up a 5-year chart and you'll feel a little bit better. But like, you know, I just think that the most recent call 3 years is not that relevant, right? Because specifically, so like to me, I still keep trying to, you want me to put a timer on this? There's so even like a Rackspace, the guys, the crew knows I don't like to do TA on penny stocks. This is cheaper than $10. You could do TA on it, but to me, even if we did something like that on Rackspace, it would be basically this. If you get the story right and you understand what's going on, it really isn't going to matter that much. So Rackspace was a $500 million market cap coming into this stock with $700 million in debt, by the way, right? Coming into this. This is again another story of you had to listen to the transcripts, and I talked about it last week. It was the transcripts are across the entire, like all companies. You hear a lot of hybrid cloud, they call multi-cloud connectivity, and Rackspace was like back in the day why it was as much as it was back then. It was a different company, different leadership, but what they do, it is a real company. Is that up here, this IPO is the peak cloud era, right? Like when the clouds were just being built. This is 2020. This is actually my era, and these guys were big, and they helped spin up all the cloud infrastructure and expand it. Once that was done, well, they weren't really needed anymore, right? Over here, and so like it's just a big duper going down. By
the way, Corning charts look similar. I mean, it had a boom and a bust a few years ago as well. Yeah. But
when you understand, like at a $500 million market cap, it's worth a shot, even if you don't know what happened. But like it at that point, right? But what happened was that the technicals in this instance too it was kind of wild, because when I grabbed it, it was actually down. It was down here, in this area. But and I put it out in our server as a thesis. But it was the technicals was telling me something's happening already. I didn't know what was happening. What ended up happening, which you may or may not know, is that AMD signs a $1.6 billion deal with this $500 million market cap company to do exactly what? Well, hybrid cloud connect stuff. Like, dude, that's it. But I'll be honest. That was a total, like, it was an educated guess, hypothesis, if you will, but turns out she's ready to roll. And you know, there's a lot, but you have confirmation later. At this point, it is still now it's a $1.5 billion market cap stock. So that deal, by the way, it's just a MOU. Also, it's not like a hardened PO like the rest of these things. But it was enough to get a re-rating. And because it's just one company, AMD. What if Intel comes in? What if somebody else, Amazon, AWS, whoever?
So what about like a Lumentum that's up 300% this year and someone's super interested in it? You would still say, look at the technicals, but you would say, don't worry about the fact that it's up 3x this year, because every AI stock is already made a pretty aggressive move.
So I think that it's important to, I'm going to pause this for a second. That's cool. Can I go down a quick rabbit hole?
Yep.
So like, I think that it's important. We understand what the market's doing. I don't know where you find these people that come to the show like somewhat prepared with shit. It's kind of wild, dude. But this follow the money thing is what's going on, right? It's a cash grab, land grab, essentially. The mistake I think that you make in general, like this is a mistake to say that all software is created equal, or that all semis are going to get the bid, or that all of these things are working. So the amount of work in front of you as us, as a community, as an investor right now is massive. I will say that we've seen this before in the cloud era, and I did trade through that, is that a lot of, like a Rackspace, like a lot of companies essentially will start moving right now, with or without confirmation of the earnings call, or really investor days right now, because people just don't really know. And like the capital flow, follow the money, is we're talking about follow the money, right? And the money doesn't start at NVIDIA. NVIDIA, where they get their numbers from is from these guys, right? And so the money starts at the hyperscalers. You could include Oracle here, right? So who is actually spending the money? Amazon, Microsoft, Google, Meta, Oracle, to build out their Texas data center. The people that are building the data centers, what are they buying, right? They're buying like compute, networking, memory, power, NVIDIA, all that stuff. Then there's secondary beneficiaries, right? Connectivity, data, observability. Yes, and these are not single names. Each one of these things are entire industries. So each one of these little things are full of like 100 or 200 companies, right? And so to know which one exactly, or which ones specifically, first of all, the pie for all of them is getting bigger. And that is the tide that's raising all boats. But I will say that probably half of them will not last, and half of them will probably be a great trade, but maybe not actually take it all the way. Right?
Which is really important. These companies are not really investments at all. They're picks and shovels trades of the moment, and you're just being completely
yeah. And it's like this is the moment. Like this exact market is exactly why, starting out as a fundamental investor, like most people here, this is the moment. This is the exact kind of market that turned me hyper focused onto technicals, because there was just no way that I could finish the due diligence required to really differentiate the good from the bad. But I knew that they were moving right now. And you have that whole invest then investigate kind of thing. And why does that come about, and blah, 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 blah. And it took me down this rabbit hole. Here we are at Technical Tuesday. But so for that reason, I will say that a lot of them will get bid up undeservedly, very likely. But it's our job, your job as the investor, to really go into, at this point, in investor days and transcripts, earnings call transcripts. And what you're listening for, I didn't write this down, but really, like, you're listening for a couple things. So the magic formula is, one, they're raising prices due to supply constraint, right? Because we know everyone's
that is the memory thesis so far, right?
Yeah, as long as they're continuing to raise prices. I'll tell you what, we can look at Arista and their price action. Arista, one of the biggest things they did not do, they did not raise prices, right? And then on top of that, they need to have net new, we call lines of business, right? To capture what? New markets, right? New markets entirely. And then you have to have net new, call it marquee customers.
By the way, 3M announced their entry into fiber optics today with AMD and Meta.
Yeah, 3M's along, but I just
but to your point, net new lines of business, right?
Net new lines of business, which essentially increases their TAMs, right? Their total addressable market. When you look at this and you're like, and then if they have this, you need to have continued traction or gaining traction in said LOBs, right? And so this, if you want to screenshot it, whatever, that is the magic formula. If you don't have these things together, your stock is not going up. Sorry to tell you that, right? Like, it's just unfortunately what is happening. They could be the quadruple beat, quintuple beat, raise, quintuple whatever. Maybe it does good, but it's not gonna be a re-rating. And so this is the formula to have your stock re-rate. And this is happening, like it's happening all over the place. It's happening in networking. We already saw it happen in memory. It's still happening in power. It's happening in freaking fracking construction, right? Like electrical cooling, all of this stuff, the physical data center. And eventually, and to my point here, is that, you know, not all software is created equal. These companies, ServiceNow, CRM, Robinhood, SoFi, they're not bad companies. These are very good companies, to be crystal clear. They're just not in today's main like point of view, right? And so even if ServiceNow or CRM were to release this, you know, amazing AI product, the issue with something like that is that that product would only serve ServiceNow or CRM customers, and it puts that company's product in a little tiny box, right? And that's the opposite of increasing. Like, it's just you're look at Cloudflare. So Cloudflare, a great company, right? They did create a new line of business. Cloudflare did this, right? They did not do this. They did attach to new. They did attach the new product to existing customers. No net new marquee customers. They did not raise price on existing lines of business, and the new line of business has a lower margin than the legacy business. So while they had one or two of these, because they were gaining traction here, they have large deals for the new product called Workers AI. It's not the full picture. And I mean, maybe CRM does it, but again, it would have to be something like a Datadog, where this is the software layer, which I think the second important piece is coming, right? But while the software layer is coming, not all software is created equal. And it has to be something that accelerates AI adoption for, like, at the models, right? Like a Datadog that empowers and accelerates in companies that AI adoption. And that will be a ton of app layer winners. And it's super early here. So there you have it.
I think that's very, very helpful.
Yeah. And for right now, this is just about where the money is flowing now. And especially when we think no, right? Because people are like, so you're bearish software. I'm not bearish software, right? I'm saying that the software is coming, but it will be the software that enables AI adoption for everyone, not just their customers, but for everyone. And not all semis are created the same either. So that's, I hope helpful.
Okay, let's do NVIDIA.
Okay.
This one's breaking out to all-time highs. And what are you thinking here?
So they got me on my NVIDIA trade today because I was so overstretched. I think I said last time. So I grabbed, I did have NVIDIA this morning. I don't have it. I didn't add it back, but you know, no big deal. But yeah, it is happening. I think 230 was like where I'm looking at right now, just on this specific moment, right? So my typical set is like, you're going here. I think it can get a little choppy. I might actually have an opportunity to grab it back tomorrow, which is kind of like what I was thinking. But if this holds, so I don't think you have to be in a crazy rush right now. I think by the end of this week, we'll know. So that's like 48 hours. This NVIDIA, I think short term before earnings gets to that 230 plus level. And that is just based on this as the move in front of earnings. Now, like I said, I definitely think that NVIDIA is going to absolutely crush it. But does NVIDIA also has to adhere to that magic formula? And I think they can, actually. I really think they can, like they have it. So we'll see. But 245 up to 260 is the upside move on this entire base, which is here, and break. So breaking out of this base here, little pullback. This is holding. I think we make another little move into this 235-ish area before earnings, not on earnings. And then during earnings, it's a TBD. If during earnings they don't they don't check all the boxes, cool, it's back to 198, no big deal, right? If they do, it's just 260 over here. I think it's pretty simple to me, just like that. But we should be in this red box about the time that we actually do get 2 earnings for NVIDIA. I think Broadcom has the same setup. I mentioned that last week as well.
Okay, what do you think about AMD then? Because that has obviously exploded a bit more aggressively. It fell to 425 today and then recovered.
Yeah, so 425 is actually that full extension. As long as it holds exactly that, this is a little extended. I don't think that NVIDIA crushing it is necessarily bearish for AMD at all. I mean, that this whole thing. So 425 is the full extension. I mean, you could hold it a little bit. If it's below 385, yeah, you're going to have another $50 drop pretty quickly after that. But I think AMD can take a bit of a breather. My thing here is that, like, you know, dude, you know what's funny is that this whole 190 or whatever pullback looks so small on the chart now. Like, it looks so small on the chart that we were looking at before.
Yeah, literally 2 weeks ago. Yeah,
hilarious. But let me zoom out a little bit here. Yeah, I mean, even if I took this one, let me just take this one just in case. Oh no. Okay. So I had 425. You know, if it's over 455, this measured move, which is, it's really like this measured move here, this consolidation doubled, and then tripled up there. I mean, we're at the extension, but this is up to 475. If it gets through that, then my next level here is, it's got a 5.
It's got a 5 handle.
528. It's extended, right? But, like, you know, what do they say? 3 months in a row is probably good. But it's gonna come into tomorrow. So if it does hold over 455, the crew out there with all the AMD covered calls that are deeply underwater, go ahead and roll them again. We roll up and out to 550. That's all I'll say. You know, if this just keeps going.
Okay. Nebius is tomorrow. I am curious on your TA on that. And by the way, guys, if you're not following Jason, I'm putting his X right here. You can please make sure to follow his X.
So, yeah, so Nebius.
I think the big question I'm getting on Nebius from a lot of people is, you know, it's ran the most out of all the neo clouds. Do you think it's in for a breather? And I think I'm getting those questions because a lot of people have covered calls on this thing. But how do you see this playing? It was almost at 200 on Friday.
Yeah, this could be 250 plus pretty quickly. It again. So I'm not joking about that magic formula. Like, you back test that, whatever. That is exactly how the stocks move. Finding the ones that have the potential to do that is very hard. But Nebius is one that has a, so you would look at it like this. Does Nebius have a track record of adding large marquee names and building traction with them to expand their pie? It's just a yes, right? It's a yes with Microsoft. It's a yes with Meta. So they don't have a deal with Amazon or Google. Could they expand the Microsoft and Meta deals and have the same thing? They totally could. Shoot, for all I know, they could do a deal with Anthropic or whoever. So they have the potential to do it. I mean, Nebius to me is like, it's Yandex, right? Like it's Google of Russia. So, like, they know the deal, but they don't really know, like, our accounting practices and stuff. So it's TBD. If there was one, if there was a name I was thinking that would actually do this, should I've been not doing the timer? It would have been CoreWeave, but I guess in retrospect, I probably should have seen that one not happening because CoreWeave is so married to NVIDIA. I don't know, but Nebius is the one that currently has the best record of doing exactly what needs to happen. So I wouldn't necessarily bet against them. If you have cover calls, I'd probably roll up and out, significantly up and out before earnings. Still collect money to do it, but I don't like selling cover calls on investments through earnings. Because especially if it's a good company, I don't want to get called away. And you'll find yourself in a world of hurt if it does do something like that. Well, I mean, cover calls are, here's the thing, cover calls in certain markets are very good. To me, like the purpose of them is to decrease volatility in a portfolio, but that means at the expense of the gains. So if you get called away, you get called away. The right thing to do is let it get called away and then sell some puts, right away. But that it's in this technical setup. This is set up to continue to have multiple standard deviation continuation type move, meaning those calls, if it does continue, those calls are going to get absolutely like decimated, because it'll probably be 250. But that is a gamble to call it that way without doing a ton of even if you did do a ton of research. So I just, through earnings on an investment that I don't want to lose, I would move it pretty far up and away. So like there's nearly no shot at it happening if you don't want to get called away. If you're fine with it getting called away, if you sell a cover call and you get called away, by the way, you win, like you won the trade. So you should celebrate.
So are you a bit more bullish or bearish on the TA going into earnings?
The TA is bullish. As long as it's over 175, the TA here is bullish. And as long as it's over 175, definitely if it's over 189, it's going to 215 and then 250. That is what is happening. And it is tracking to do so just like that. If it doesn't, I mean, this can easily pull back to 155s and still be along. It could even pull back to 140 and still be along. So in a case like Nebius, did they even move last quarter? Okay, so they didn't. So last quarter they didn't move here. Yeah. So actually, now that I think about it, whenever I have this, they don't move a lot. This is the earnings before that. They moved here. The last 2 quarters they have not moved very much. This reminds me of a Tesla setup. So like, no matter what happens, actually, this doesn't change the chart. It's bullish. Even if it drops to 140, it's still holding support. It's probably a buy. So technically, actually, for that reason, it doesn't look like it's going to move. But again, I wouldn't risk it with an investment. So TA looks long, but not necessarily on earnings, because even if earnings don't deliver, the technical support a dip buy.
Okay, next up, let's do Rock Lab. I see a lot of comments about people saying what's going on with Palantir and Amazon after hours. I don't see any headlines. Palantir's up about 1.3. Amazon almost hit 270. I don't see any headlines, but if we see any headlines, then we can talk about it. You called this thing 80 to 120. You've called it on multiple stocks at this point. Hood, Rock Lab.
I also called the taco today. The dip taco.
We didn't get Trump to taco, but we did get a reversal. So I guess it wasn't
close enough. Close enough. This was like we called this here, called this on socials like a lot. I mean, it was following when a stock follows technicals like IREN was for so long perfectly. Then and I don't really have a reason for it not to. I expect that. And this is from April. So anyways, we have arrived. So congrats on the win. Number 1, big dubs. So anybody that was, and we talked about this too last week, right? And we were like, listen, if you get frustrated and you sell your Rocket Lab because you're watching everything else 10x, you're going to sell the low. Like that's just what's happening. And if you FOMO back in right here, right now, you might buy the high. So I'm just going to leave it at that. all targets have been acquired. This is not extending yet. So this needs to hold over 121. It is not. And so it is running into resistance. It was just peaking right in here. But this upside resistance right now, sometimes people might freak out on like how small a charts I can zoom into. But 121.30 up to 127.28, this is your full extension. Now, for Rocket Lab, I think you just, as long as hitting its head up against that, I think that's fine. What you don't want to see is like, you don't want to see this. That would be not so fun. So 127 is upside right now. I do not have a reason to trade for that. So this is currently not extending. I think, so I had a trade on for this. I took down 80%. And that's how a trader is going to trade. Like and that's what I mean. Like you can roll, you could do whatever, but you take massive profits. You right size it back down to, because this was honestly a trade like this should be about like, depending on how you did it. If you did it right, a trade like this should be about 500% win with an option, using options or more. But when you understand that, you can take 80% down and you're actually back to your original starting size, and it's not a big deal, even if it comes down again. So if this, by the way, does come down again, it is this like $100 level that would be what you would expect to see. And I would just take this again from that whole move, just about 90 right in here is what a pullback would look like. So because of that, what I don't really want to see is I don't really want to see momentum get lost. I'm not seeing that yet, but I am seeing it struggle to continue on. But from here, $90 is the dip buy, which means that if you are not taking profits, you are at risk. And the risk to reward here is not as good. I would expect at least some sideways action. And that $90 like thing could happen in a day and instantly come back. And it might be exactly what it needs to do. But if you're sitting in a lot of profit as not an equity trader, doesn't really mind, but a options trader should mind, because if this happens, whatever options you had, they're not recovering. Even if the price is higher, like up here, your options are going to be less than they are right here. That's just how options work. You got to know that. So anyways, it looks okay. Target acquired, take measures, let some winners run. But it's definitely a spot to take a little profits on the charts.
Tesla,
I think last week we talked about it. It was that 365 right here. I can't believe it hit it like exactly. Did you buy it? This thing's been on a bit of a ripper, I will say. Yeah, that's fine. It's right now into that primary resistance here. And we all know the magic level is 415. So if this can come down and hold 415 for a while, I think a little while. So again, not in a rush on Tesla. If we can get a new base here, just like that, I think that's what sets it up to make the next leg. And so that next leg would be just like one of the charts I was just looking at. But you're up to 488 from there. I think also a number of reference. So 488. So that's what that looks like. If you lose the 415, call it 413, whatever, well, then you're gonna come back to probably like 380s. And then we're TBD. But this looks like a little bit of a sideways consolidation for a minute. And then when she's ready to go, she's going to let you know, because she's going to be, Tesla. She doesn't like to share the limelight. She just goes, and nothing else goes when she goes. But that would be up to 488. That triggers, from a trading perspective, over 450. So yeah. The trigger like this, when I do something like this, I'm not actually buying down here. Like that's if you're an equity person, that's fine. I'm not an equity person. I'm an options person. So options people need to know exactly the moment that price is about to accelerate and options are at their like optimum pricing, that's just over 450, like as it's coming out like that. And then you're going to get like a whoosh $40 type move like that. It might even go further than that. But if and only if that happens and it does actually break, then the move from here, if I were to measure it, and I'm actually not in this trade here, but that would be into the back, another shot at the sixes.
So you think there's a chance this thing kind of gets the all-time highs back in December, which was around 498, 500?
Look, Tesla is in a funky spot to do a lot of things. You know, some of the stuff that you hear on these conference calls are like companies repurposing existing gear to let scalers like use it. And that then creates a much larger addressable market. I think the SpaceX thing is super interesting. But Tesla itself has a lot of gear. I don't know. They could flip a switch very quickly, but a story shift like that, yeah, would instantly take this well over $600. Plus, Tesla trades as a proxy to Elon, and Elon's in Trump's good graces right now.
Okay. Let's do ASTS real quick, just because they had earnings.
Yeah, I moved the timer down to 2:30. I've been forgetting to do it for a little bit.
Yep.
So ASTS, I did not listen to this earnings call. I don't know if anybody did or didn't. It was looking better. So this 79, just between 75 and 80 area that was prior support right here. Support here, as it went through here. And, you know, post earnings, we usually give it like the 3-day rule, at least. I think this is still, so this level is between 79 and 77. That's what I would say the resistance is. I think this can get a pop because, like, technically speaking, there is some liquidity down here around 70 flat. Like, it is a pivot point, but it's not a big one. So I think it can go back up, but I'd wait to see this actually hold 80 post earnings, and then it's probably ready. Then it goes to 90 like this, and then you're back on the mend. Like, you're definitely back on the mend. And that move would take you from here to 103, just like that. So that's what I would have to see. And I would see another little stutter step right around 95. And I would need it to actually continue on. So that's, if it can get over 80, then you have a $10 quick move to 90, potentially immediate follow through to 95, 96, then expect some stalling, kind of sideways chop. And if it can continue on one more time, you're at 106 from there. But that all starts over 80, not before.
Micron.
I said I was going to reset the timer and I didn't even hit the button. What a loser. I mean, dude, this is wild. I don't know if I want to give you this trick or not, but okay, so today, so I had 750 as like an extension level, and it came down just to, looks like 700, 725 to 750. If this area holds like that, this is a tradable quick range. I think Micron's pretty liquid intraday now. This is more like a day trading setup. If it can continue on through 810, which is Monday's high, then you have an extension. Yeah, so this is the pathing. That extension is to 9, just under 9. Would look like that. So if it can hold 750 tomorrow, it should make its way up to just underneath 800. as the one trade. That's not an investable level. It's a tradable level. And then if it can continue on through 808, again, not an investable level, a tradable level, that takes you to 8. That takes you like $100 from there. All that said, this is trading now. This is not really investable level to me, but this is pure momentum. And so that's where the momentum would go. Last week, you asked me about Micron also, and we talked about Micron last week. It was like $600. On Tuesday, it was $580. And you said, what do we talk about? We were talking about if you're buying Micron here for it to go to $800 in a year. And I said, dude, it's not going to take a year to get to $800. There you go. Right. So that's what I mean. This is completely momentum. You can't, if you thought that Micron's upside was $1,600, don't think that that's going to take very long for that to happen. That's what I'll say. Right. And that this, like some of these blow off tops back in the day, the last leg of whatever happens incredibly fast. Right. Like if you think of all the greatest short squeezes, even, right, the last double of those moves all happen within like a week. And so like if you're investing here thinking that it's going to go to 16, this is not an investment. This is tradable, but that could happen a lot faster than you're thinking.
Why did you not buy the dip on this today? Was there just better opportunities that you saw elsewhere?
Yeah, better opportunities. I think Micron's consensus, right? I think a lot of these things are consensus. What I bought the dip on, I don't believe is fully consensus. I think there's a lot of skepticism around it. And then when you listen to the transcripts of the earnings calls across the board, one thing that's very true, the reason why that little, magic formula is the way it is because the data centers where the training models all happen were like at the core data centers. You listen to IREN, you listen to Cypher, you listen to CoreWeave, whoever, they're all sold out through like 2027, sold out, right? And so I'm not really trying to be like in a consensus trade where the gear's already sold out for the next 2 years. I don't think that means that they have to go down by any stretch of the imagination. But I think that the edge and the connectivity between the edge, both on the server side edge and the client side edge, I think the client side edge is the one that's just like, that's in inning 0. Like they're just still planning the game. They haven't even gotten to the first inning pitch yet. But I think that's the biggest opportunity. But the in your face right here, right now, that's like maybe inning 1 is the server side edge. And it's just not here. Right. So like, could I allocate a few $1,000 to throw a trade on Micron? Yeah, I for sure could. But again, it's just like, even on Micron, if I were to really start paying attention to it, it would not take a lot of money to make a lot of money on a Micron trade. But it's more like you're going to know intraday, and you'll have to see. It just wasn't my focus because I'm already on, like, I know what I want right now, and I'm just like, okay, we're accumulating. There are things that I'm buying that, like, the move. You might think this is dumb. Like the move hasn't even started, right? So like this is going to be a play. I'm just letting you know. Like this Honeywell is going to be a play. This is a massive base, right? They have a lot. I'm accumulating equity here, and some leaps, but I don't know the leaps. The leaps are probably not going to. There's a lot of splits that are coming, so that plays a different game. But this is a very bullish chart. This is an extremely bullish setup on an extremely large mega cap that is not so dissimilar to what we saw happen on like a Qualcomm, something that hasn't gone anywhere for many years, and you're stretched to think of why, but then you start looking into it and you're like, oh shoot, really? Just like you're talking about 3M. I've been buying 3M for like a long time, but this was my biggest buy on 3M a couple of years ago. Around the same time I bought GE. GE was like $35 pre-split. On 3M, thinking that 3M was going to be the next GE, which it might be, but I think Honeywell actually might be in reality. It's very possible. But anyways.
Pounter,
All right, so Palantir. I mean, I think that TJ's got this one locked and loaded, baby. I'm serious. Like our beloveds, their time will come. Their time will come. I don't even know that they're going to go any lower. They might not go any lower, but I don't think their time is now. I think that the rest of the stuff has to chillax. But this is getting a little bit tight from a consolidation perspective. I guess it depends on how you sort this. It's like right there. I think this, so the chart has not changed one iota since the last month, 2 months, 3 months that we've been talking about it. Yeah, 3 months. For 3 months, this chart has been in the exact same spot. And I've said the exact same thing. I could say it one more time. But for right now, near-term resistance is about 155. This needs to get through 165 for it to actually be like ready to rumble. When that happens, which it will, I just don't know when, then it will be ready to rumble. Between here and there, pick your poison if you want to sit in it, or sell some puts maybe. And downside, I think about 115. So if you want to sell some puts, I think selling puts around the 115, short dated. Hopefully you get put the stock and you can collect a little juice, but that's about what I would say is support right now. 125 to 115. But this looks perfectly fine.
Okay. By the way, breaking news right here: Anthropic to raise $30 billion at a $900 billion valuation. So Anthropic officially getting ready to raise a lot more money right here. And Anthropic is the reason for why Palantir and a lot of these software stocks again have been down. But I agree with you, Jason. I mean, maybe it goes back to 125. Maybe that was the April 13th SaaS lows.
Yeah, that's what I say. Sell some 114s, especially if on a big red day. Right. Like if you get a big red day on Palantir and you sell some like out of the money puts, you're probably going to be like 90% profit the very next day. Maybe you just close them.
CoreWeave.
Yeah. So I listen to all these calls of the three that, not all of these. I listened to IREN, CoreWeave, and a little bit of Cypher, but like I definitely like CoreWeave of all those way better. Way better. Fundamentally, they have a unique offering. They're like purpose built. They have relationships. They have expertise. I think they have the makings of a moat when they scale. Problem is that they can't scale yet because all these, they have to buy the gear still, which makes it a crazy financing issue. So that said, I have 90s, 92s here as support. Let me go ahead and recalibrate for this last move. Oh, you might actually be there. So support would be 102 to 92. So about a $10 range right in here. It just hit that today. But yeah, I definitely liked CoreWeave just because they sound a little bit more unique, at least their offering. And again, I might be a noob here because I have not listened to one of their calls before, but here I am. Anyways, yeah, 102 to 92. Technically speaking, 92 would be the discount area right there, as close to 95 or below. How's that?
Yeah, I think that's fair. I mean, it doubled in like a month. So
great trade, by the way.
Yeah,
great trade. I mean, this is one where like if you're investing in CoreWeave, sorry, my time ran out. If you're investing in CoreWeave, this is one where you listen to these calls. This is a real investment. You know that you're freaking crazy early. You know that they're spending like crazy, raising like crazy to build something that's potentially really unique. It's got to be an investment. So you're along for the ride.
IREN.
Yeah, this is not. So Actually, I had trade on, took the trade down. 59 was the resistance here, 61 to 59. Post earnings, like during the call, is looking good, but post earnings here, not so much. I think it could probably, as long as it's holding 53 here, it's okay. 53 and a half. If it loses 53 and a half, it's back down to probably 30s, quite frankly. But and then you'd have to pick it up again, which becomes a tradable range. But if it's through 61 and change, basically this area right here, the target remains 75s, which oddly enough is like where that little wick was, the first target. Oops. And so that's like overhead resistance. It can still happen, but it's not. But what this chart is telling me is that it needs a lot more time to breathe. So while this can happen, like it doesn't mean that this is not happening to, oops, I got to zoom out. This is to 110 to 130. And so the levels are like this. So maybe you get a whole nother shot at this trade. And I think I said this on your show last time, and I was like, I don't want to say this because it's just like it's there. It's sorry, it's a new cloud. But the technical support up to 130, I really just like got to bite my tongue whenever I say that. But in order to do that, you have to, just like all the rest of these charts, you have to go one level at a time. And so it must hold through here, 62 to 74, and then it must breach like this, and then so on and so forth. And you guys have seen me do this exercise so many times. The thing is that if it doesn't breach, then you expect to retrace and at least at minimum a consolidation in all of these zones, because you have to hold the trend. And if it doesn't, then you know, hey, look, these trends like are just, they are what they are. And so even if it got to here and pulls back, you would expect that pullback. But these arrows as a trader, these are what we look for. These are the areas where price is going to accelerate very quickly, as you've seen in the past, and or consolidate at the lows or at resistance. So these are what we call tradable. These are our trading ranges, and that's how we develop them. Or this is me laying them out for you, which means that support, near-term support right now, 53.61. If it loses that, the next level is 41.70. Below that, about 30. If it continues to breach levels, it continues to go down. That's what it is. If it reclaims the level at any time, it goes back up and you're through the trend. These levels are hard. They're not going to change. And they will dictate the moves from here.
And real quick, what's your upside target on CoreWeave?
Well, 3,000. Hang on. I'm joking.
Maybe.
Don't you dare. So CoreWeave, so very similar setup, actually, right? So this is 140 was that equivalent overhead resistance. 140 on CoreWeave is the equivalent of 61 on IREN. And 95 is the equivalent of 42 on IREN. The upside target on CoreWeave, 250 first shot, right? So the real one, like investing type target. I think the levels here, I'll give them to you. So through 145, this gets to 185 quickly. Over 185, that's when this happens, up to 250 quickly. And in between here, these are your up and down rejection points. And it's just essentially creating its base right in here. If it loses 195, then it does go all the way back to the bottom, but it doesn't have to. You know what I mean? Like it can, if I just move these to the left, right, you'll basically see these. These has happened many times in the past, just like this. Happened in the past, expect it again, just like that. So essentially, it could do this, but it could do what it did in September of 2025. But what we're really looking for is for this type of bottom here to actually show up higher in this area, and that is good. So a consolidation period for a month or so, right? That's a long time. Around that $100 range, and then make another shot take another shot at 145. It might take a couple times to breach, but if and when it does, these are the levels over 145. It's a straight shot, just under 190. You crack 190, it's a straight shot to 250.
Okay.
But this is long-term time horizon. So I wouldn't necessarily even do options on this. Like, this is more equity, because when you listen to it, it's an investment.
Hymns.
Himothy. I don't know why. Who calls it Himothy that I trade with? One of these guys. I'm just mumbling right now. Mumble. This is what happens when you let me go like by myself, when I'm just like talking to myself.
We haven't even pressed the timer in like 10 tickers, dude.
I know, dude. Let me hit the play button. So 28 was that last break over here, and I had upside resistance right into this 32 area. Didn't quite get there. So for that reason, I think it's a little bit more back and fill. I did not listen to the call. I don't know that it matters on this one, because it doesn't fit in any of those cake layers in general. But if this can consolidate over 20, that's going to be better. It doesn't actually start going so if it can consolidate over 20, that's what I would expect. And then take another shot at the highs just before it reports again, and probably over to 35 by the time it's reporting. And if it does have a good quarter, cool, then you're into the 42s, potentially 50s, but not if it doesn't have a good showing. By then, there's like, how I just did the follow the money for the AI stuff. Did you know that you could do that same, like you could make, I heard you talking about a document. You could make a doc and fill these, because these are industries, with names, right? Which is, I think, what you're doing.
Yeah.
But you could also do the same concept and apply it to space, and you can apply it to GLP-1s.
Yeah, 100%.
Is that wild? So like, this is how how most people, this is how I assume most people think, but I've also over the years come to realize that maybe it's just how I think and not how like normal people think, because I'm not normal. But anyways, let's move on to the next one.
By the way, AMD said they own Marvell, Sanmina, ABSI, and the Quantum Sock XNDU in their 13F.
Where's Hollis? Hollis giving me a hard time. Xanadu.
Okay, that's how you call it. I called it Xanadu. Can we do Meta?
What just happened? Oh my goodness. Hold on.
Did you not pay your bills, bro?
No, first of all, TradingView completely.
I feel like you didn't pay your
I don't want to talk about this. TradingView, listen, you guys don't understand as retail traders how good you have it. And I am a retail trader. I'm very upset sometimes at getting flagged as a professional trader. Just so you know, your boy has to pay a bunch of money, because they would not let me do anything other than Ultimate, because I'm a professional trader, for $200 a month.
Oh my.
I cannot access this otherwise. Yeah.
That is a bit of, like, is it because the volume of your trades?
Dude, no, you don't trade on, no. I don't know why. It's just what happens. Like so these guys, I guess, diluted though.
Yeah.
Is it because of the volume of my trades? No, I don't know. It's like they see a post, maybe it's not my payment. It's stuff. I think this was dilution over here.
Okay, let's do Meta, because that's one people are asking for. I feel like this is one. Do you agree with me on this? You buy this and just don't look at it. It's
100%.
not a trade. It's literally
100%. Like, maybe here now you could take a trade actually, because like I was saying earlier, like how come I can't see my, damn it, dude. The current setup, why is this looking like this? Okay. So I think you could take a trade for a little bounce, because the support that we've been bouncing up off of is 595 to 86. And you remember how, like, whenever I'm talking about support here, like, I'm always saying, well, I try to always say, sometimes people don't hear me say it, but I'm usually generally saying something like this. And it sounds a little bit like I have a level, we call it a level of interest, that might be 585 on something like a Meta. I don't take a trade. I have a zone of support. I don't take a trade until it's coming out of said support, because I need to wait and watch to make sure that buyers are in fact stepping in and support is in fact holding and not just breaking down or breaking through. So here's our level. There it is one more time. So for that reason, I think you could actually take a trade, because the range here is from 595 to 630, believe it or not, which it's done many times in the past. This is one of those areas where I'm saying that, look, it's typically a very quick move like this, both ways, down or up. Very quick move. It's a liquidity pocket that she likes to move through quite a bit with high velocity, as you can see here. So this is a spot where I was very close to taking a trade on this today, and I may take it on something tomorrow for 634, at which point I would be the frick out of there and maybe even flip short. Because to your point, yeah, I think it's a tradable range. I would not expect it to actually bounce, but pockets like this, how I derive them, you'll never really get it like that. But this show, I'm just giving them to you, so you're not really learning a whole lot, but I'm at least giving them to you. Like, this is the trading range that Meta does make a big move through pretty frequently.
Okay, I think we might as well do Microsoft after that.
Yeah, so my first thought this morning was like, okay, software's catching a bid. Let's go look at Microsoft.
But that didn't happen.
Nope, it sure didn't happen. Like, did you think the same thing?
Yeah, I thought there would be a trade on software, and then all the money just waited on the sidelines. As soon as they saw the 2 p.m. reversal, they went back to semis.
Honey, there was a trade on software. It just wasn't Microsoft. It absolutely was a trade on software, because Meta had a very good day all day. It's like, boom, boom, boom.
Well, but Meta fell to 594 before it reversed.
But that's what I'm saying. That was maybe the difference where Microsoft is coming out of resistance here.
Yeah.
Here. So this is that first level of resistance. Maybe just the technical setup. I like Microsoft. You know which one you never talk about that we probably really should talk about, and I haven't really charted it. So maybe I'll do a request because I don't have a trade on it. But support here is, I think I said this before, just as close to 400 or below as you can get. This would be a good, just like I was showing you in the Meta. This is the area of interest, but as it's coming out of 400, so let's say Microsoft dips below 400, say it hits 385, and then as it's going up through 390 into 400, that's kind of like the catalyst where, like, that is how this would happen. So I might look for something more sub 400 if you see it. That, or if it's over 425, then it's, straight to 450, but not yet. But the one I was talking about, can I do one?
Yeah, do it.
Is Snapple. Snapple. Not like the drink. It's a phone. This is a phone. They make phones and computers. I heard. Not 100% on that, but I hear they have some kind of conference coming up. Things like this. This is at all-time highs. No real AI story yet. Maybe this Mac Mini thing is a thing to note, but the chart is conspicuously strong. Is that the right word? Probably not. But the chart is extremely strong, and I think this really wants to crack 300 like ASAP. ASAP. This 288 is the very near term support, but this looks like 320 ish up to 335 to me. Quickly, I mean, like by July into, so Apple's strongest time of the year is like July 4th weekend, and it's like probably looking like that in the 318, something like this. Plus, when's their WWDC conference?
In June.
I know there's probably a bunch of cool new colors, you know.
Dude, if they don't have Agentic Siri, I wonder if that stock drops 5% easily.
I bet you it doesn't. I mean, it might for the day.
It did last time. I mean, dude, I think people are tired of.
Yeah, but it's a new CEO, so it could be a whole nother story. And so just the fact that there's a new CEO, I think for right now is buy the rumor. You understand? You know what I mean? Buy the rumor. When the news drops, I have no idea what it's going to be.
What if it's the foldable phone that they introduce?
I think it's supposed to be the foldable phone, right? So it's supposed to be the foldable phone. I think client-side edge is next, or is last, not next. It's last before application adoption. But yeah, I would not. It's a very bullish chart. This is an active breakout, mind you. So I wouldn't sleep on it. The chart says don't sleep on me. It says I'm going to rip your face off slowly is what it says.
Okay.
But anyways,
UNH breaking out to 400. What do you think about this?
Yeah, UNH breaking out to 400. She's breaking out to 500, right? Maybe we map that.
I mean, it's down from 650. Yeah, you're right.
Yeah. So realistically, that's where she'd be. So last time we talked about it was maybe a month or so ago. I put this in our server. So I got a bunch of alerts right around 360-ish right here. And then we have some continuation today. Definite can. So again, I don't know that you need to go out and rush into this necessarily. I think 388. Sorry, I dinking around with this thing in my settings, Scott. There you go. Sorry. It's a different. Yikes. Oh my goodness. So 390 could be a very tiny pullback. This could actually pull back as low as 360s and still be fine. But the trajectory here is to just under 500 right here, 490s. Initially with an initial stop at 434. So I have these green. They should actually be red because these are where resistances are. So resistance is at 435 and 490, but that is heading in towards like resistance, like so, right now. That's what's happening as we approach the next earnings. But yeah, this should be follow through from here. Viable dips, 100% viable dips. 358. Wow, that was a perfect dip buy. Look at that. You have no idea what I'm talking about right now, but what I'm talking about is like this is the earnings candle right here.
Yeah.
I was getting my alerts all up here. There it is. There's your buy.
Dude, TA is pretty cool.
Yep. Yep.
I've been telling the chat I've been trading a little bit more and trying to use the stuff I'm learning from you in my trades. And, you know, even if it's a couple $100 here or there, like it's cool to see a thesis within minutes play out or not play out, you know?
Yeah. Yeah. I mean, you guys don't know how many times they may ask me like, why don't you just like day trade every day and make like $10,000, $20,000 day trading? I'm like, I mean, we can opportunistically, but I'm probably different. Most active traders don't do what I do. And because my background is the same as everyone else's here, it's like I really enjoy the stories in the stocks. And it did make 6 cents today.
I made $195 today. I posted it in Jason's Discord.
Did you?
Yeah, I posted it.
Oh shit.
I shorted Shopify.
Oh my goodness. So help me understand, why did you short Shopify?
So I am working up to being able to do TA on my own with everybody. Hopefully in a couple of weeks I'll be able to like do it on this show. I'll try to run it myself. But
so you're saying we're gonna do live trading sessions together?
We could. I was gonna say I wanna do a trade on a Tuesday in a few weeks and then explain people why I did the trade using TA. And hopefully it makes sense, because I'm not just like throwing darts. I'm like actually trying to use some of the TA. But I shorted it from 100 to 99.8. And
it's a great trade.
But then it fell even further. So
yeah, it's a good trade. So like, yeah, but you're 101. You could have been 101.75. That's perfect.
Yeah.
These lines on my charts are day trading levels.
At 100, it looked like it was not only losing momentum. There was one indicator I use. I'm sure you know the order block and the market break of structure, and those two signaled that at 100. Look at him smiling. Look at him. I'm using his terminology, and the shit was losing its break of structure, and then the order block had so many institutional sellers, and then I'm like, yo, psychologically, I was like, psychologically, if it loses 100, that shit's going down, and so I shorted it with like 2,000 shares or whatever, and then it went down. It was great.
That one?
Yeah, that one. Yep. It was also under the 9 EMA, I think. And
yeah, these little lines that
are those faint. Little lines, baby. It was below that shit, and I was like, you know what?
They can't see the lines on my screen. I have them super faint, so
dude, I love being a bear. Like when it comes to trading, and you're like, yeah, bitch, you're going down. like that shit feels amazing.
Wow, bro. Did you tell him about my circle? I had a handful. I had called today perfectly this morning, and I traded it horribly. I'm like, my chat knows. Like, I'm like, oh my god. I had a short on circle. I had this level like 138 lined with an alert too, and I was like, okay, she gets here. That's massive overhead resistance from way back. This is me taking swing trading and applying it to day trading. And I was like, okay, I can get this. And then, dude, I took it like somewhere in here, maybe. Yeah, so I would be waiting for this to break. And I took it like here, short, like 120 put. And it just like chopped on me this. And I think I just got tired and closed it somewhere probably in here.
And then it collapsed.
And the thing like doubles.
That's what happened with IREN the other day. I shorted IREN for 20 cents and it went down. I made $200. I could have made $22,000 if I'd waited.
Oh yeah, dude. Like I think I posted in the chat, like, oh yeah. Okay. So like hilarious. Like I just got, so like day trade, first trade of the day, called it perfectly. So calls, right? Qs, 710 call, closed full for a double. Second trade, 705 puts for $120. Don't look at how much these contracts went to. You will be sick. And then 700 puts at 70 and then 45. Closed those. Like all these went like 5x. There's the circle. Yeah.
But those are
quickies. So like you're asking, do
zero
I
DTEs? That's why they can go up so quick, right?
Yeah, for sure. But volatility, we had a gap day today. So it's like, as an option trader, I also kind of know like, oh crap, I'm dealing with a lot of volatility right now, and I don't like that. And just like got a little impatient. But we're back, baby.
Okay, let's do this one. K Patel, thank you for the super chat. Based on Jason's Taco Tuesday, I made 30,000 this month. Wow. Can you please review ANET? I am also curious.
Is K in my group right now? I just need to know.
Yeah, Kate, let us know if you're in his group. Also, let us know if your first name is Chris, because that'd be hilarious. If it's Chris Patel. But I'm curious about ANET as well, because it's down a lot on earnings. And I wonder if you think there's a moat when it comes to networking in the CIP.
So if you don't know about Arista won the entire cloud build out. They won. They just decimated. I need to tell the story. They ruined Cisco. Like they ruined it when it came to the cloud build out. Actually, Cisco actively gave the battle up. And so I think that, so he knows. So this is him me trying to give some sauce. Fine. So they actually gave the battle up. Jayshree, Arista is a great product. It's one of the best products I've sold. Easiest products to sell. It's not like Palo Alto, but like they have pricing power. They've always had pricing power. They did not do the magic formula on the call. They do have the products similar to Cloudflare. They do have the pipeline and the deals on the table. But what they did say was not good. What they said was that they had to push out the timeline of the customer acceptance for the gear and testing and stuff. Not because the product's bad per se, but because the freaking data centers aren't ready. So like, because the customers don't have racks to put the gear in yet, they can't sell it. And so that's not really on them from that perspective, but they do have their big products. So they do scale up, they do scale out, and they do something called scale across. When you talk about networks talking to each other, scale across is exactly what we were talking about for some of the other stuff, right? You know, multi-cloud discussions back and forth. Scale up directly competes with NVLink. So when you realize that, you're like, oh shit, well, these guys are now like NVIDIA is coming after them. They are. But scale across is a new kind of product line for them, which is probably their best upside thing. I just think, you know,
well, why do you think they got hit so hard on earnings?
I just told you why.
Networking is so important for.
No, I just told you why. So like, because this whole thing is the run up ahead of earnings. Because of that scale across platform that they have, and they've been talking to like large customers. And so the expectation into this was that Arista in fact locks them, those customers, and they show up with the big PO, but they didn't. And what they did instead was that they said, well, our customers are not ready to accept this, and adoption across the space is still early phases. They literally pushed their timeline out 18 to 24 months, which is like, you don't want to hear that. And on top of that, they did acknowledge, yes, supply is very constrained. But again, what they did not raise prices. I'll tell you, probably because they're already so expensive. But all that said, I don't know that they're going to win this. I do know that they won the cloud build out the last cloud build out. Does not mean that they're going to win the new one. Next,
and before you continue, networking is not like memory, right? There's way more competitors in networking.
No, memory sits in networking.
Memory is more important of a commodity. Is that why you would say they have?
No. You know, like when you get cable, when you have internet at home, you have internet at home, right? Yeah. And you have that little Linksys thing with the antennas. That's networking. That's a
no. I get what that. But why does memory have way more pricing power than the networking stocks?
Because memory is inside networking. So they have memory chips, and the real network switches are basically servers themselves. But they route traffic, right? And so some of these things do have pricing power, right? Cisco Nexus 8K is a new product line that they actually have like good wins on, which is part of why you're seeing Cisco do well right now. Arista doesn't have that. They don't have the full product suite built out yet, so they're still working on it. But I think my point is that I think Arista gets a mulligan here now because of their pedigree, and because we all know that they're not going to give up this fight yet.
Right.
Does not mean that they're going to win though. And like I was, you know, quite frankly, I would have wanted to hear them do better, but they didn't. But I do think because they're Arista, they get a mulligan. And Jayshree, she sandbags bad. So anyways, so it's great leadership, world-class leadership also. I mean, they didn't buy back stock during any of this either. not that big of a deal. I think, you know, again, they didn't do the magic formula, period, end of story. This was their best quarter ever. And she's literally said verbatim, I've never seen demand at Arista in my tenure at Arista the way that I see it right now. So, and she does have, it's a little bit more nuanced. Arista is like competing with Celestica right now. And in my, I keep saying my space, but in that space, Celestica is what we call white box, like a OSS is what we call white box. It's high churn, high revenue, extremely low profit margin. It's basically off-brand knockoff gear. That's what it is. And so that's what we would call it. And it's like test gear. So as they build out these cloud infrastructures, they're not at like production. Basically, they're not at production level yet. And Arista is brand name production stuff. They go from white box to blue box to brand name. And that was her kind of terminology, but they're still in this blue box moving. They have their stuff that's almost production ready for the new workloads, but it's not. And she
are you buying the dip on Arista?
Yeah, I bought the dip today. Because again, so from this anchored low to this anchored high, which is in alignment with this, you know, your favorite double bottom, the bottom, right? Again, what I like to see is like I have my price of interest, let's call it, which is here between 193 and 137, which happens to be the 200-day SMA. I'm not using the 200-day SMA as a thing right now, but I want to see price coming out of support. So while yesterday it kind of breached through, not a big deal, but it wasn't ready yesterday. Today it's up through support. So even tomorrow it can come in a little bit, but Arista, knowing Arista, this is a quick shot to 147. And if it can get through that, then I should expect to see it come back to where it just was, right at 170, which is probably the top for now in here. So this level right here, right now, I have a pretty quick line of sight for literally to tomorrow to 147. So picking it up today around 140, to me, was a very clean risk to reward. A stop below 137, buy it around 140, stop below $3 risk to get at least this move here to 147. And if it can get there fast enough, then it can actually breach that 147. And knowing Arista's personality as a stock, it could probably in the next week or so start to fill in this move after your 3-day wait period. So you're 1, 2, 3, 4. This is day 5, at least a full week. This is when people would typically start to step in and buy a dip. But I have the technical supporting for right now.
Oscar.
But that trade is invalidated below 137. And why he was asking. Cloudflare, I'm watching. It's a little bit different. So I have.
Jason, let's do a couple of these quick tickers real quick before, because I want to let you get into your flow state on these AI names, but people are just begging for a few of these. Let's just try to get them out of the way.
Cloudflare theirs?
Oscar.
Oh, okay. Oscar, yeah, for sure.
Let's do like 3 or 4 of these non-AI names, then I'll let you get into it.
I love how you say like you want me to get into my flow state. Like
no, because you're cooking, because you know so much about these companies. I don't even know what that
means, but I guess that's a thing. Like because
we see it when you get into it, we see it. That's for sure.
It's like,
so let's do 5 non-AI names, and then we'll go back to the AI.
Yeah. So Oscar, we mapped out last time. I think this was one of those upside options, right? So Oscar was over 20. You go to 23 or so, like very quickly. Here you are. There you go. This is like very much there. 2380 essentially. We have a fair value, boom, right here, and then you have like an actual breaker structure, 2560. So if it can get through 2380, then you're into this area, which quite frankly is resistance. So you're at resistance. This is just like Rocket Lab. This is like a spot to take some profit, but post earnings, this could continue. And healthcare as a whole had a really good day today. I think that's why Diamonds was so quick. It would look like this. So I'd expect some consolidation. You just don't really want to see it losing 22 with strength. Support remains at 20 to 18. So it works like this. So that's area one. If not, this is the pullback like this. So why I would say like probably a quick take profit, leave some runners, because a pullback here would be equally violent as it just went up.
Okay. SoFi.
SoFi. I just really like it. What is a flow state? What?
You've never heard that before? That's a thing.
I mean, I heard Ryan say that to me the other day. I was like, I don't even remember what I said at Chicago when you gave me the mic, and I was like, what was I saying?
No, dude, momentum is a thing. Like I'm sure you've experienced it, even if you haven't called it flow state. When you're getting a bunch of trades right in a row, it's like you're in your zone. You know.
I will say that's probably the biggest. That's why today I was like, ooh, it could be dangerous for me because I'm telling you guys, like the roll that we've been on right now is insane. And I know that when you're cooking, you just kind of start to naturally feel a little bit invincible. And that's dangerous. So 15 bucks here. I think 14.93 was that prior kind of pivot area that remains. Look, to me, this guy, it needs to get back over 17 bucks with the quickness. This is, or it doesn't need to. It needs to get back over 17 bucks to want me to even think about looking at it. I'm not thinking about going long or short. I think you could slap a $15 short put and covered call a day, and probably print on this thing because it's going to be a barcode for a minute unless something changes in the market.
That's a good point. If SoFi doesn't explode, the covered, like it's too good of a business to, I think, go into that 12, 13 range. And it's too boring of a business to go 18, 19, 20. So this should be perfect for covered calls right now.
Yeah, like a Hood, Palantir, SoFi. I think like you just acknowledge the moment that we're in and you make the most of it.
Yep. Let's do Hood. And we'll do one more and then get back to the AI names.
Yeah, what's same thing, bud. I mean, we should be doing this though, actually.
But Hood's a little because if Bitcoin crashes or goes up, I feel like the covered calls can get messed up on Hood.
I mean, I don't think so, but that's me, right? I've never been a believer in I believe it. I just don't like it. I don't like that it trades with it, but you know, it's stuck. This is what we call pinned. This is going to be a barcode for a little while until we get some kind of something to look forward to. So whatever their next event is, that's how these are going to go. These companies are going to have investor days come up sooner than later. They're going to ramp a little bit into investor days. Whether or not those investor days become sell the news event, who knows? Specifically for fintech, I think the rates and stuff like that might be a thing, but their product launches around their investor days between here and the next report, that's really what this is going to be about. So they need to gain the momentum. The momentum on all of these have kind of like faded, and the limelight's not on them right now. Not bad stocks at all. It's just not their moment right here, right now.
Okay, last one, then we'll get back to the AI names. Celsius. Did you buy the dip on this yet?
No, I didn't. I literally said if it was 25, maybe.
Where is it at today? 29?
Yeah. But at the same time, I can look at this market and be like, why?
Yeah.
You know what I mean? So I'm like, with that lens, I can.
No, but that's a real thing. In 2024, 2025, it's like, oh, this stock is cheap. Let me buy the dip. Good fundamentals. Now it's like too many stocks are not only cheap if you look at their forward earnings estimates, but they have momentum. And Celsius has no momentum. But it's not just Celsius; it's a lot of other names. So why would you buy the dip?
It's not Monster Beverage, but I would say, this is probably the time to pick this up, even though it's going to feel like a bit of an opportunity cost. I think this is going to be a good spot. If you don't mind not getting the face ripper rally, of everything else, I think this is a respectable zone in general, and definitely as it gets through 35. If you're into adding this kind of exposure, that's what I'll say. You know, and I have Netflix, right? And like, okay, I was happy that I had Netflix for part of the day as it was ripping intraday and holding until I just now checked on it, and maybe I don't feel so good about it, but it is what it is. You know, it was like one of the biggest green things I had, and I was like, oh, at least that's green. So this is the kind of thing I'm talking about. Like, you know, when the bigger names maybe take a little bit of a breather, these names are the ones that are not going to move with those. So it's not really a bad, I wouldn't take it as a bad thing. 3250 is the level on Celsius that if it is over 3250, it's on the mend. Right now, you're kind of bottom fishing.
Okay. Let's get back to some of the AI infra names. Cloudflare, I think, is a really good one. We'll talk about Akami after that, but Akami, whatever, bro. AKAM.
Akamai.
Oh, it's Akamai. Oh, thank you.
So
why can't companies have normal names like Cloudflare? That's easy.
Listen, do you want me to get in the, what did you call it? Vibe? We're vibe coding here, or vibe whatever, but I don't know. So okay, so Cloudflare is a high multiple company here. They're really like three companies, or generally. We talked about this business called a CDN more recently, I guess, in the last few months. I think that's part of the edge, if you will, the data center edge, internet edge. CDNs more or less make the internet work. They're pretty important companies. But the work that they do is not really that profitable, but it is what they do. Cloudflare happens to be like I'm going to reset this, best of breed for not just CDN, but like traffic, internet traffic security and all that stuff in the ether. I think the opportunity in front of them is good. They do have a product to address that, but like I was saying a little bit ago, that product is called Workers AI, and it's for agentic, like agent-based traffic and API calls, things like that. They are seeing some traction on that, but that new product is lower margin than the historical product set. So they're not adding new names. They are attaching that at a large rate to their existing customer base. So it's an attach for them. They laid off 20% of their workforce. I don't think they should have gotten slammed for that. I don't think that's a bad thing at all. They basically said it was just the right thing to do because we didn't need them. But basically, the problem is that their legacy business is actually shrinking. Oddly enough, both Akamai and Cloudflare's legacy CDN business, I think, is losing to Fastly. But that said, for Cloudflare specifically, which is different than Fastly and Akamai, they're already dealing with an extremely high multiple because the revenue they've had for so long is so dependable. Now, not so much. And the new product set, that the suite that they're bringing to market, has lower net margins, and they did not get any net new names on the call either. So there were no net new marquee customers. There were large attach rates for the new workload for the new product set, but at, again, lower margins than the legacy products, which is going to eat into that high multiple.
And Cloudflare is not being treated like software because it's AI infrastructure for the internet, right?
It's a bundle. It's a service. So they have a lot of infrastructure. Don't think they don't have a ton. So these three companies have a lot of gear. They have a ton of gear, and they have the most expensive and the most powerful gear. And they run services on that gear to operate essentially the internet and charge for the services. So they have that, but that service, like DDoS protection, why does like Twitter not work sometimes? And it says like DDoS, whatever, that's Cloudflare, right? Or your website, you're trying to log in and it shuts you down. That's Cloudflare. They call it bot management. That's all Cloudflare, managing the traffic, web application firewalls, things like that. These are just pieces of part of what these companies do. But it is in a sense a software and security company for internet traffic. period. And but the traffic across all of them between Cloudflare, Akamai, and Fastly, each one of them were like very explicitly and adamant about being in a very unique position to capture to grow their businesses uniquely because of what they do historically. And it's mostly about this API calls. It's the Cloudflare and Akamai could both put a hard number associated to AI traffic and how much it's increasing the traffic on their products, as opposed to Fastly. They couldn't. Like Fastly it's a technology first company, probably the best CDN, raw CDN out there, but couldn't really articulate the opportunity in front of them. Didn't really have a clean product that was already out to the market, capturing net new revenue. Unlike Cloudflare and Akamai, they just weren't executing there. But even though whoever wrote Fastly's deck shouldn't have put the names they did on there, they're getting a new CMO. So whoever that person was is already out. So that's
so
good.
let's look at Fastly.
Yeah.
And
So let me.
Akamai.
So this Cloudflare it's a very squeezy kind of spot. So right now, all I can really say is that if this is back over 195, then it's back on the mend. And between now and then, this is kind of like going to be searching for the bottom. And I don't know where that is yet, because this one, because of the multiple, it's probably going to take the longest to base out, but it'll probably look very spiky like this, which is kind of what happens. And this will be, yeah, that's honestly, it's a tough spot where they are. If I were to take even this, yeah, they basically already passed where I wanted them to stop. And because of that, I'm like, I gotta wait, because this might be 180s. Probably that's basically the level I had, was about 180s. Fastly, I think 22 was like my stop on this. Problem with Fastly here, well, when you listen to the other calls, I think they did. Fastly did get new customers. They're large customers for Fastly, large deals for the space that they're in. I think they got Twitter. I think they got SoftBank. I think they got some real names. But when these companies get real new marquee names, they're always under NDA, so they can't really say exactly who it is. The support on this guy is right here. So between 18 and $17, which is that same spot that I was saying before. I was like, if I got a chance in between, like below 17, I was probably going to pick it up. But this is right back into kind of like that general support zone right in here. Again, the problem though with Fastly is that not a big multiple. I don't think. Well, maybe at this point, is that they really could not articulate the opportunity in front of them like the other two. And while they do have a data suite available for this, like they have this thing called AI Accelerator that really just wasn't in the conversation. And they do have a lot of suites. They did talk a lot about the new security offerings. They did book very big deals for them. I think what was apparent is that these guys are growing, end of story. And I think they're taking legacy business from Cloudflare and Akamai, but that's not what the market wanted to hear. So I think this is like, I think Fastly's recovery is going to honestly like go hand in hand with this new CMO, with her onboarding process and how she acclimates to the company, because she's the one that's going to be able to articulate the message to the market and help put together the products, the go-to-market products that actually address exactly what they were. Because like Fastly couldn't say like, this is what we're seeing as a from a traffic perspective, specifically around AI. They couldn't identify that. I think they're so focused on like, this is the greatest CDN, and like, here's what a CDN does. They're probably a very good CDN, but the market wants you to be bigger than a CDN. Because you want to move on
to a different stock, or
no, the third one.
Okay, yeah, the third. That's what I was saying.
The third CDN, which is Akamai. who like, again, this is the story. So this was a $17 billion market cap company. So meaning like the market saw Akamai's addressable like profit as like 17 billion. And these three companies all have Akamai and Fastly are the only pure plays. Cloudflare is not
Well,
a pure
Akamai
play.
also, it also pumped because the rumor is Anthropic was the $1.8 billion deal that they got, right?
Well, so I don't see any follow through after that rumor leaked. I don't see any follow through yet. I'll go through the charts in a little bit, but Akamai and Fastly are pure play CDNs essentially, and there are a couple other companies out there. Like you can look at A10 networks that are not CDNs but have a space here. But anyways, it's a $17 billion market cap company. The largest deal in the space for these type of products is usually $5 to $10 million, which is typically taken down by Cloudflare. This quarter right here, not the current quarter, but the quarter before, they said they're working on a I don't even know, I got to go back, on a very large deal. They might have even locked it over here, but this quarter, after the security, so this is the security shenanigans like Anthropic, CIM, or whatever it is going to take them down. Not funny that it's like fully announced that, again, $17 billion market cap right here, that they do a single transaction for $1.8 billion. So you think of like, holy what? How does a $20 billion, a sub $20 billion market cap company with the largest deals in their industry, capping around 10 million, do a one shot deal for 1.8 billion? Mind you, 7-year contract. But how does that happen? That's paradigm shifting, right? For the whole industry there, but absolutely for Akamai. And they're the only ones doing exactly. So you think of that magic formula, big marquee name, paradigm shifting type deal, never before seen. To do what? To do exactly exactly address this agentic workload, and API calls and things like that. And it's actually infrastructure. So like it's full blown infrastructure as a service, which is the same thing as the original cloud era. So like I was saying earlier, like these three companies have a ton of gear. They have the best performing gear. They have the best expertise. These companies run the internet. I'm just kind of ranting, but
the point is you're bullish on all three. This is the one you're the most bullish on.
This is the one that has the Momo right now, and it has the catalyst and is executing right now. I think that Fastly and Cloudflare have a place. I really do. I think Fastly's recovery aligns with the new CMO's onboarding, assuming that she can right that ship. And like I said, they need to be able to not only articulate the opportunity in front of them, but actually capture the business in size to increase their adjustable TAM and not put themselves in the box. Cloudflare is not going to have that problem, but they're fighting a high multiple SaaS kind of legacy business that's slowing with probably a good product, but a new product that is only attaching to existing customers, not getting new labels quite yet at a lower margin rate than their historical business. So while this whole situation evolves, Akamai is the one that's just, I don't know that they can even see second place in the rearview mirror just yet. Does that make sense?
Yeah.
Like this leaped them so far ahead of anybody else. It's just insane. And so not only did they lock this 1.8 billion deal with it was leaked to be Anthropic. First of all, Anthropic doesn't do deals like this. Like that in itself is like what?
Yeah.
And secondly, it's they increased the contract size on the call. So, and they're raising prices across the board. So the magic formula, check. So yeah. So what I would say about this is that if Akamai has acceptance over 151, this stock has been in a broad. First of all, it's not a bad stock, but it's been in a big sideways level for a long time. An extension here takes us to like 250, technically speaking, which is not even that big a full extension. I'd say like 170 first, then 191. It's like this. So here to here. I don't even know what the market cap would be, but depending on, I think as these deals, if they can make it another deal or expand on that contract, or do a deal similar with hyperscalers, like it could change the story here quite a bit. Even if it were to double, it's only a $40 billion market cap company. It's not a company that basically makes the internet work. It's not I wouldn't sleep on this at all. I would say do a lot of your own research. Don't listen to me. I might not know what I'm talking about, but you know, I do okay most of the time. I think if this is over 152, price acceptance over, you see this start to run. In the meantime, I think dips get bought based on the paradigm shift. The deepest dip that I could possibly see here is in the 120s. But I don't even know that gets, because the story is so paradigm shifting. And I don't even think that many people know about this company still.
I agree. Yeah. Can we do an Ambarella? What's the story with this one? Up 4% this year.
Ambarella is a San Jose based company. You want to get the CEO on the phone? Give him a call.
You probably have his number.
Yeah, actually. So
yeah,
no. You know, this would be like a flyer. Their technology is like the deep client edge. It's not data center side, which is why Qualcomm is doing what they're doing, because the new products on the data center side, one of the new products, which could be significantly more worth significantly more. These guys do their like wireless components and client side AI chips. So like GoPros and things like that. They had a big deal with GoPro for a while. Intelligent like chips in the actual like little client pieces. So like cameras, wireless receivers, like Ubiquiti type stuff, that kind of stuff. But this is a founder-led organization, hometown, San Jose, good dude. They're very excited about the company. For anybody that I've ever talked to that works there has always been pretty excited about the company. All I can tell you is that they haven't reported earnings yet. If there was ever a time for Ambarella to have its moment, this would be the time. So like, does that mean they're going to actually do it? I have no idea, you guys. It's honestly been very range bound. So like between 85 and like 50 for many, many years. So coming up to the top end of the range, if it can actually break out, it would be a big breakout. This is its heyday over here. When they had deals and stuff like that with GoPro, that's all they need is like a marquee. All they need is like a marquee name and be like, oh, we're in Meta's new AirPods and we're the ones that are doing the translation. Or like, that's the kind of stuff they would do, right? And then you'd be like $100 stock. But I don't know that's I don't know that actually. So that's all I can tell you about Ambarella. But it is client side edge, like outside of the data center, intelligent like components. But the guy's been talking about this stupid moment literally since the beginning of time. So I want to give him a shot. I want to give him a shot. This is the spot. This was the spot on Netflix right here, right now. Yesterday, I think it was like that. So I had 91 area, 89 to 91 being like the first support level. The second support level is here. We had what's called like a little fair value. I don't know if it's that important. But this went down to like 85-ish. And that's like part of when we got this big deal over here and it just like ripped face to the upside. It filled in like a bit of an imbalance that was in the market. So if it's over 88 moving forward, this is on track for 92. And maybe if safety stocks are in the play again, then it could be back into the hundreds through that. I'd say like 95 plus, maybe 100 in a few months if this is the trajectory. Worst case scenario, this hits a bit of a head and shoulders, but that still gives you up to that 200-day before having it come down. So it's tradable range, potential investable entry, potentially. But look, this is where a bottom would show up. You just don't want to see it. You lose yesterday's low or today's low, really. You want to see this get bought up from here, and then price will tell you.
Okay, we got about 15 minutes left. Let's do a bunch of rapid fire. We can get rid of the
How do we
timer.
go so fast, dude?
I'm just going to give you tickers and let you run with it. If you are not following Jason on X, please make sure to. His Discord is free to join as well.
I like this new Colombe. I got this. This was in Chicago, the hotel. They have Colombe. Colombe coffee
from the hotel.
Very good.
Huh. How were you able to get that on the flight? Or you bought it in California?
No, I bought this in California. I had one.
Oh, you bought this. You saw the branding there. Okay, gotcha. Okay. Yeah, Chicago was fun, dude. It was a good time. It's good to see you, and it's good to see your people too. It was so cool to talk to them and
every time
see how much they love to trade. Yeah.
Are we gonna do like an under the radar New York one?
I don't know. I can't go to the one with Evan and
I know, but like we're gonna grab lunch or whatever, right?
Oh yeah, for sure.
Did you show them my can you show them my picture?
What picture?
It was a good picture. You'd be proud of your boy.
What picture?
It's in your text, but I can't I'm in a suit. I'm like, whoa.
You're in a suit? What are you talking about?
You know.
Yeah, show me. I don't.
I have to pull it up.
Yeah, you pull it up. Oh, I see this. You want me to show it? Oh, this is great.
Yeah.
This is.
I got it.
This is amazing. Look at that.
Oh, I put it on the screen share now. We're good.
Oh, you got it.
I look good.
Look at that. I love it.
I think it was funny. I'm like, I don't remember wearing that before.
So Jason will be here August 3rd in New York. And
yeah. How do I get this down?
Whoever goes to that event will see him. Okay, cool. Rapid fire. Let's get into these final names for today. Again, thank you everybody for being here. SanDisk.
Oh, baby. I kind of wanted to look at this one. SNDK. Dude, this does not look bad at all. So like I have to go super in the weeds on some of these like this because like it's just one level at a time. The issue is that if we lock a lower high tomorrow, so coming out of today, even no matter where we closed at, I thought we were going to have a bounce into tomorrow. It's about how far we bounce tomorrow. If we can get through this overnight gaps on a lot of these. So a lot of these companies had gaps like from yesterday's close to today's open. That's still there. What I would say is SanDisk has to get over 1488. This is now resistance in here up to here. So if it can get through 1488, then it's now entering resistance. And if it can stay over that, people are stepping in. And so that basically takes it here, potentially through here, but you got to make sure that it keeps momentum. If it continues and closes over 1550, yeah, she's good. If it's closing over 1550, then we are looking at 18s in very short order. What is that? If you bought the dip and it gets to 18s, 30%. This is what I mean. These are momentum stocks.
The earnings dip 80%. Yeah, 30% from here.
For today's low.
Yeah. I feel like today proved to everybody that these stocks are human, but they might have proved it for a day or for a couple.
Yeah, here's what bad looks like, just so you know. Also on the table. So I think this is possible. Maybe not even possible, maybe like probable. But I don't know that any higher than that. I don't know that this is going to happen. I think the best case scenario is really that this goes sideways for a minute and lets the market catch up. But this could easily do this where your lower end is going to be more towards 11s, but we'll see.
Kopin, KOPN.
Oh, this is Connie's. I don't know. So they just reported earnings.
It pumped, dumped, then pumped again.
Yeah, that's okay. So essentially, you have a range here. You need to get through 588, and you just don't want to lose today's low at 477. If it's not holding 477, then you're gonna go back. So that was resistance, or up here, breakthrough, retest. That's fine. If you drop this down to really like these smaller stocks, I usually go daily. I see a lot of confluence of the same level over here. So that was resistance. You want to make sure it's support over 650. Then 650 is another upper resistance level. If it gets through 60, if it gets through 660, it's more like 850. I guess I'll just do this for Connie. Yeah, I have the same thing, 850 to 9 right in here. But 7 would be your next level, and then 859. Cool.
OSS.
Next. Holding-ish. Yeah, so a lot of these, like you want to let them, and there's going to be similar to Amazon, which you can kind of look at. We haven't looked at today. Probably important. So you have an earnings stick, big green stick right here, and then you have like price action after earnings. And so essentially, just like similar to an NFP scenario, you make sure that this can continue to trend above it. So this gets 1, 2, 3 shots here, has not made it. If you want to find out what a dip is, you essentially just take that earnings move and you draw your fib, which puts your support right around 12, 13 bucks, high 12s, low 13s for support if it doesn't. So what that means is that this can easily back and fill. That's what this means, back and fill. Take another shot at that. But it's not going to be until it's actually trending over that's 1630 that this is ready to roll. And if and when it does, then it is 21. We should, just so you know what Amazon looks like, it's very similar. And I'll be quick and dirty. Earnings candle here, same scenario. I mean, we could do this 1,000 times over. We've done it 1,000 times. Not the first time I've showed this to you guys either, but here and here, you get a couple of shots to do it. So 1 shot, 2 shot, lower high, fail shot. Now you know that you're going down into at least halfway here. And this is going to be your general support for what we call a back and fill. Maybe this is good. Maybe this is good enough. And it can take another shot. If this next shot that it tries to break the highs, I mean, like when I say shot, I mean attempt to break the highs. If it doesn't, this should expect this to be range bound for 45 days, which, you know, that's how this happens, but it's not bad enough to break down, not good enough to break out. Expect it to be generally range bound for about 45 days until the next earning run up begins. All right.
Nokia.
Well, I mean, they bought the real company. Wow.
Do the calls, 426,000 calls to 72,000 puts today.
Mm-hmm. For when?
I that's just pure aggregate call volume.
Mm.
But I mean, and not all those are bought, but I mean, does the TA even kind of look like 25 is on the table? Because that's the number that I keep hearing.
28. So TA is taking me here. 22 to 28 there. But you're at like a legacy. You're at a very old pivot. You're basically at this here. 15, which, I mean, so Nokia bought a real company that solves a real problem that that makes good stuff. The next question is whether or not Nokia can enable them to be more successful than they were before. And I think that's what we want to know. So 16, this is the spot. 16 is a big deal. I wouldn't, so this could get really squeezy, but I think as this attempts to, it's going to be $16. If you see it actually holding a week over 16 and it's not flying, I would be like, look at this, dude. It's really.
I feel like it's one to take a flyer on.
Oh yeah, totally do it.
100%.
Yeah, I'm all, yeah, let's go.
I feel like we take a flyer on it, bro. Like,
Don't listen to me.
no,
but
it's
yeah,
not an investment, but as a trade to 17.
it's a
18,
trade. It's a trade. It's a Informatica, Illumina. Oh God, they bought Optus company, dude. A real one.
I don't know. Maybe there's a
Yeah.
trade here. Okay, so that's Nokia. Let's do a few more. Danny says she sold puts on Nokia. Yeah, Roman from Nebius did just tweet, "See you all tomorrow" with a smiley face. So I think they're gonna have a good earnings. Feels like.
Yeah, I gotta tell you who they bought. So like,
And again, when you look at
Brand
Nokia, the revenue growth is not impressive. At
it's the
4%.
same. It's the same exact story, right?
Same exact story as Qualcomm almost, where the numbers aren't impressive. But
No, it's because you can't see what's happening on this. You can't see what's happening on the revenue because it's like these guys bolted on. I'm trying to find what the hell the company was. They bolted on a legacy company, core site, no, routing fibers. It's a fiber deal. I think it's a fiber. I can't. Someone knows in the chat what the name of the company was. It starts with an I. Anyways.
okay, last couple. Infinera.
Yeah, Infinera.
Okay, last few. Shopify.
So super interesting, dude. Like if they want to go and be what like at what point does this get dumb too? Because like I think Shopify is a good company. At what point do you actually buy this?
I feel like
$80.
yes, like 85 and lower, even 90. I feel like it has. What's the lowest it hit this year? Was it
Well, you
today?
don't want to know that. Oh, I was like the lowest is 20s. In
The lowest
22
this year. I think today we hit the 52-week low. If I'm not wrong.
Oh yeah, for the year, yeah. So I have this area as a general support area. So what I just did was I measured. So this is just a typical trader measurement. When I do these things like this, by the way, this is like when I draw these lines like this, it's like think of it like your simple moving averages and stuff like that. Like the levels I'm going to point out are so consensus that they're like self-fulfilling prophecies, like a 200-day SMA. So that said, most people don't know the magic ones. And then we get to Jason's special sauce. But so 102.91 is the 50% mark, right? From here to here, from the swing low, extreme low to extreme high. Not a big edge. But what I would say is if you see it coming out of 103, out of this support level, you're probably a go ahead and nibble. Otherwise, as close to 85 or below 80, the 200-week SMA down here, this probably also can't see that, but in this darker, in this brighter green box where it says 84.50 down to 79.03, that's your bigger support. And You know, a name like Shopify can make that trek very quickly. Actually, speaking of, it makes that trek very quickly regularly. And so that may in fact actually be an opportunity. And you can see where this was prior resistance in 2024, prior support in 2024, prior support in 2025, and the launch pad for most of its kind of big moves. So $80 as close to it as you can without being overly precise, I think is, I think I'd be a buyer.
Okay, Zeta.
Zeta.
My
What
take
did
on
you
this,
do?
my take on this is software is dead right now, and
Stop
I
it.
don't.
We
No,
just went through it.
Okay, sorry. The AI oriented type of software is not dead, but Zeta is I mean, look at Reddit with advertising. Look at Meta with like.
Yeah,
If it's not some type of AI cloud computing chip design software,
100%. So that was my caveat with Shopify too, right? Like it's, you know, I might buy it, but like it wouldn't be a buy because I'm gonna think it's gonna go up, right? Unless
also the fear of agentic commerce takes away the need for a middleman like, and I think that's a stupid bear case, but nonetheless, it's there, right?
Yeah, for sure. So like, why would Shopify not make a deal with Perplexity though?
They already did with ChatGPT. So I think that's a dumb bear case, but the fact that it exists in the market is so iffy about it. Like, I don't understand how Reddit fell after those earnings either, right? So to me, a Zeta, a ServiceNow, like they're all just stuck in the doghouse, which means I feel like you would agree you're buying them to be in accumulation mode. Exactly.
Yeah. Mm-hmm.
Exactly.
Yeah, I think
not an appreciation mode at the moment.
I think Reddit would be a, what do they call when you're not consensus, like you're
contrarian
AI bet.
Oh, Reddit was a consensus long going into earnings. It's not like it was under the radar. You know?
Well, in your circle maybe, but like, I don't know. Like, I think Reddit could be a good play if we know that they definitively capture traffic. Anyways, Zeta's at support, boys and girls. This is the area where you would expect it to hold. Oh, I just zoomed in. Did you just buy this right now after hours?
No, it was already pumping after. Wait.
Well, yeah, because it hit 1590 and it's up $1.
Oh, I don't know. No, it's up 19 cents right now.
Oh, 50 cents. It's up 50 cents. My bad. $1. Yeah, this general zone right here at 1590. That is that's the first level of support. I think that's it's like a nibble level. Honestly, if you see 1550, that's a better discount, but this is fine.
ServiceNow?
Meow. You know, another one I immediately looked at is like, are they gonna catch a bid today? No, they did not. So no, just you know, more lower highs, somewhat of a higher lows. But the thing about higher lows is that they have to come with higher highs, and this is not coming with higher highs. And so all that means is consolidation until it gets out of this trend, which basically means it needs to be over $100. And it's 50-day simple. Otherwise, it would consolidate like this. Best case scenario to me is that you get a bit of a rising kind of wedge situation like this, where you get faked out probably a couple times, and then ahead of next quarter's earnings, it actually makes a move. But I think you're probably chopping sideways until you get closer to earnings, and then it's a anticipation of, and then maybe they do, maybe they don't deliver.
There is a name that's up 18% after hours, Penguin Solutions. I don't know if you heard of this one, Jason.
Yeah,
but it's getting a lot of buzz in the memory space.
Yeah,
a $2 billion company. I mean, maybe it's up next. MRAM. I don't know what this company does, but
I just figured you're going through these names. I might as well check.
Yeah. This one I'm a little more weirded out by. MRAM, I'm hearing people say is a pump and dump, even though I have no idea. Peng, I feel like people are thinking is more legit. But I don't know. I don't even know if the numbers matter here. If the story is memory, then they're connected deeply into it. But it's just crazy, right? There's all of these different names. And like you said, it is our job to now go into them and try to see, okay, is there a thesis here for Penguin to get to $100 now that it's at 50? If we forward look on what they're doing in the context of memory. Yeah. They have relationship with SK Hynix, I believe. Like there's a decent chunk of juice there.
I just go on this. Do I recognize anybody, dude? I don't know.
Yeah, Peng is almost 3x from, but again, when it was, look, Peng was what, sub 500 million. So the percentage moves are huge, but also, you know,
it's white box stuff, I think, right? So like so like the build out isn't really like, it's moving so fast that we don't really know what the right product fit is to solve all the solutions. So basically people buy everything, right? And until the official solution is hardened, which might be something like, let's say Arista for networking, Celestica could rip between now and then as the white box provider, but may not at the end of the day be the actual winner. Does that make sense? And that's what I mean by like at across the board, it's a land grab. Like, and a lot of companies that may or may not be winners at the end of the day actually make it. But rising tides for right now make it a good trade for the most part. But yeah, this is you know, this is 2 billion. I mean, I would expect my rack space to be at $8 tomorrow anyways, right? Maybe it's 2 billion, who knows? But maybe not. But that, yeah, these kind of low float stocks can be pretty wild. I know I'm guessing like MRAM up 3%. Well, 1 billion market cap. Yeah, some of these things are these are movers. Oh, someone's asking for Uber. Huh.
The MRAM's up 300% in a month. I think they have like $1 million in revenue, market cap's $1 billion. But again, it's, you know, where the market's insulting them.
Yeah.
Like Uber, like why is Uber even kind of exciting right now, right? Like
it's not really, it's just from a technical perspective, it's that earnings setup. It's a trade. I had it alerting me today. Whereas like technically speaking, unless Uber, who I will tell you has a ton of gear sitting that could redirect a ton. I know that for a fact. But like, so they're holding that earnings support like that, where how it does the back end fill that we just kind of walked through, that setup, the technical setup. It's literally right here at 76. I think it's as it's getting out through 76, we would assume 77. And if it can get through 77, you get a shot to take out those earnings highs. That's the setup. But broader, like no drawings on, let's say, a larger time frame. If it did that, when you zoom out, this is a bigger like bottoming formation, right? Which would take it, yeah, sure, to 80, but potentially 85. And the velocity of that with these SMAs at least expanding into 85 as the 200 is how a bottom forms over time, and down $100 off the highs, right off of critical support. It might be a sleeper long. I could see that, but I wouldn't expect this to like jump right away. That it's not. I mean, it could, but it's setting up. It's weird. It is weird to see a setup like this happening. It wouldn't really make sense, but this is one of those moments where, like, you know, the chart's kind of telling me I should watch. It really is. The guys always ask for Planet Labs. Do you know this one?
I mean, I know it, but
Oh, you
I
do?
don't know.
I used to work with a company called Orbital Insight that does what Planet Labs does. It was like one of like a good friend of mine was the CFO there. The guy who created that company, Orbital Insight, created Google Books, like the library, like the organization. Anyways, and it was like, dude, these guys that do these orbital imagery stuff is like crazy. Anyways, this yeah, this looks good. Space. It's just not getting out. Like break, hold through. I think this goes to so 30, so 33 was support. We had the same thing earlier over here. Yeah, I got alignment. If it can get, if and only if it can get through 40s, then you have 50s on deck. Like so. 1, 2. Okay. You got another one for me?
Yeah, let's do like 3 more, then we'll end it off with Bitcoin. Fluence.
Grinder. Got it. What was it?
Fluence. FLNC.
Oh, Fluence. I saw it on the Bumble was better. Fluence. Energy.
People are thinking this is Bloom 2.0, basically.
They think of this as what?
Bloom 2.0.
Well, I mean, I was skeptical of Bloom 1.0. Really, I'll be honest. But they proved me wrong. I don't know how there could be 2 of them. Resistance is 25, right where it just hit. So for now, this is coming down, even after whatever. I don't know if they did the magic formula to where to 17.5. So 17.5 is your support. And I think that's where it would, that's where it should base around. And you could go ahead and watch it from there. And then if it makes this trek back up to 25 and eventually through, oh my God. That's, it looks like this. That's how that would set up with a max target of 31 right now, only if it got through toward 35 with your dip somewhere around 17s. It's not a bad trade setup, but through the quarter, assuming that they don't have any financing issues and the company doesn't fundamentally change.
Okay.
Makes me think of ESV. Oh yeah, we can do Qualcomm. EOSC, this guy. EOSC is setting up. Why? What's happening here?
I think they had earnings and Fluence also pumped.
No, they have not had earnings yet.
Oh, then they pumped on Fluence's earnings.
Do we need to watch this? This is set up.
Dude, this was at freaking double digits a while ago.
When does this report? Tomorrow morning? Probably in like the next 24 hours. No time. What happened? Why does this look like 13? What's happening right now? Okay, watch this tomorrow. I can't take a trade on it. Someone said Global Foundries. You said Qualcomm, Qualcomm. Look, this. I took this on 2 things. 1, 2.8 was support, is support. And then there's this little session gap right here. You know how cool TA is? When you have this kind of stuff outlined and you're like, all right, there's my gap. There's my inefficiency in the market right here. And you know it's coming down, your baby. You know, it is what it is. And then it just hits that magic spot. And you just see a flood of buyers. Like the second that happens and you're like, oh, it's like, ah. Anyways, As long as this holds this 208 to 206 level, you're on the mend.
And do you have equity here or just calls?
Both.
Both. Okay.
I have more leaps though in equity.
Yeah, GFS, and then we'll do Bitcoin.
Global Foundries.
This is up 90% this year.
Yeah, it's in the doc. In our you're making a doc, we've made a doc. Are you gonna base it off ours? Mine?
No, I just used Claude to like find as many as I could.
Are we gonna do co-development? Because I could use a version 12 of ours because it just keeps expanding, dude.
No, that's the thing, dude. Like initially my thing had 100 companies. It's 250 companies now.
Dude, mine started with 150. And it just like, I'm like appendix, add an appendix, right? And then it's like, oh my God. But it gets you to think, right? Because it's a research project, which literally means it's never ending. And it gets you to think and it gets you to look at things a little bit differently. And once you start doing it, you really start to understand like why a lot of things that didn't make sense before. So anyways, Global Foundry, look, yeah, it's on an uptrend for sure. I think there's something here, maybe extra capacity. 65 is general support, but $70, holding $70 is a big deal. This is on track for 80s.
Okay, let's do this one real quick. OUST, Ouster.
I've heard of this. 24 from earnings support. As long as it's over that, it's generally okay. I'm actually going to have to head out in a little bit too.
Okay, last thing let's do is just Bitcoin then. We'll end it out there.
I'll bet he's 90s.
Okay.
Yeah, maybe a little bit higher. Yeah, so 28 resistance and then 32 resistance. Not ready. Oh, we got real close. So I said last time, expect like a pretty heavy rejection off the 200-day. Probably, I said like 77. It didn't get there. So it got to like 79s. I don't know that this is ready yet, but I could still see that rejection down into the 70s, like mid 70s. I would not get deterred. I think this is a while. This takes a while to actually get through this, but this is how pressure builds on a chart. So it can pull back a little bit, and that pullback is like 77s. But to me, this is in the high 90s, and then we'll see. But I think the recent lows of 69 are a good low to trade off of. I almost said the low, but I didn't.
All right. Good stuff, Jason. Thank you so much. We got through as many tickers as we could. We will try to get through even more next week.
We got through a lot.
Yeah, appreciate you spending your time every Tuesday with us. Chicago was awesome. Please check out on Twitter. There's Discord and School of Gains. I'm putting the link tree in the chat. You can check it out if you're interested in learning options.
Learning options on your price action, learning from knowing nothing. That's the idea, to teach you from knowing nothing. Come in. The idea is to immediately give you a bunch of value without you giving me a dime or us a dime. And if you can make money with just getting like introduced to the community and to a piece of the curriculum, well, you should be able to. Then it should be a no-brainer from there. But
a lot of people run services and stuff. The reason Jason and Stock Talk to me are the like literal only two people I would ever trust is because they actually deliver value. It's just that simple. And you know, people are happy to pay when they actually get value. So
yeah, we have like no turnover. And honestly, like, we charge, but if we didn't charge, there would be a bunch of riffraff. So like we charge so that it keeps the community like serious, and like people are, we make real money, and this is a business. And
I've met some of the people in his Discord that make money, and I met them in Chicago. And
I meant a business as in like trading is our business. And so like it's teaching you how to treat trading like a business. Like, everybody has losses, and those are just like business expenses, right? And so like the idea is essentially keep your business expenses low and like hone in on your good selling products. And it's okay to have expenses like a Robinhood or a Palantir or a SoFi, as long as there's a long-term goal for those kind of things.
Right.
And maybe a weird way to say it, but that's why I don't have a problem like keeping those things here. And I'm not gonna, you don't get FOMO chasing the rest of the stuff. Don't sell your good stuff. But yeah, I mean, it's a good deal. A lot of people make a lot of money. Yeah, but you gotta take it seriously. Trading for freedom.
All right.
Yeah.
Thank you, Jason.
Cool.
Thank you, everybody.
All right, man.
We'll be back tomorrow on the market open.
Adios.
All right, everybody.
Bye.
Have a good one.